Move on to the next session, technical session. Our favorite simplification of reporting. So this session will be handled and moderated by Mr. D. Ramprasad, co-chairman of this committee, and he is a chartered accountant by practice and my good friend. He represents ASA chartered accountant firm, and this firm has offices across the country. On to you, Mr. D. Ramprasad.
Right. I must first of all thank the speakers who have consented to be with us today. Mr. Richard Rekhy, Mr. T.K. Sridhar, Mr. Simi Thapar, and Mr. Chakravarti Jagannathan. And I will give a short introduction. And I'll set the context for the session. It is simplification of reporting. As you see the program flow, we started with simplification on the approvals for setting up the business, then we moved on to approvals, and now we come to the reporting, and then of course we will end with the exits and the restructuring, which is going to be the next two sessions. The idea is to give a set of recommendations from the BCIC chamber to the government. You know, after collating the thoughts which are emanating from various panelists and the speakers, and we would be very happy to do that. And it has been very kind of Dr. Ramesh, who spoke the keynote address in the morning. And he said that he would like to also participate in the deliberations and summarize the recommendations before it is given to the government. So I'll give a small introduction of the speakers, and I'm very happy to introduce Mr. Richard Rekhy, who will be delivering the keynote address on what more can be done in the simplification of reporting. So, Mr. Richard Rekhy is entrepreneur, board member, and former CEO of KPMG India. And I just told him that he is a shining example of the liberalization, moving from an Indian firm to head the international firm in India. That's a big achievement, Mr. Richard, for you, and I'm very proud of it. He is experienced consultant with a demonstrated history of working with management consulting industry, skilled in ERM and internal audit and accounting and CRM, and a strong entrepreneurship focus in accounting, taxation, economics from Delhi University, Hansraj College. Welcome, Mr. Richard, to the podium. And I also warmly welcome Ms. Simi Thapar, Chief Country Officer, CSA Leasing, which is a $3 billion corporation, part of the $40 billion Tokyo Century Group. She is an MBA and MS from INSEAD, and she joined CSI with more than 2 decades of experience in equipment leasing industry, specializing in project and asset financing. Prior to CSI, she was business head of the equipment finance leasing at Tata Capital Services. She has been invited as speaker in USA, Dubai, London, Hong Kong, and Singapore. She is also an honorary member of Not-for-Profit Society engaged in women empowerment. Welcome, madam, to the forum. Yeah. Equally happy to introduce Mr. T.K. Sridhar, CFO of ABB Asia, finance and accounts expert with 30+ year experience of global company. He brings to the table exceptional skills in accelerating business growth, establishing profitable finance practices, leading transformation programs, and solving regulatory challenges. He gained expertise in ICFR and managing statutory internal audits. A CMA and a certified independent director, he also has undertaken professional development course at IMD Business School, Switzerland. A focus leader, always inspiring teams to deliver outstanding results. He is not satisfied efforts but believe in delivering end results. I welcome Mr. Sridhar to join the panel. And the last speaker with whom I'm happy to introduce, Mr. Jagannath Chakravarti. Thank you, sir. It was a last-minute, call from me, and sir immediately consented to join. Mr. Jagannath Chakravarti is an expert in strategic finance, accomplished skills in handling end-to-end M&A, experience in planning efficient capital and corporate structure and restructuring, hands-on in corporate laws, taxation, FPA and A, and proven master in efficient cash flow management. He was in Mindtree and then went to Kumi in Chennai, then has come back to Bangalore, liking the city very much, I think so, and done year-round service to service sector industry, and we warmly welcome you to join the panel, sir. I also warmly welcome Mr. Vijay Vishwanathan, Principal Consultant and Partner in Chandran Raman Chartered Accountants. He has founded and built the CSR consulting group to be reputed KPO service provider accounting firms in US, Canada and UK, which has reached significant milestones. I welcome Mr. Vijay Vishwanathan to join the panel. Yeah. I now request Mr. Richard to come and deliver his keynote address. Welcome, sir.
Good afternoon, everybody, and I want to thank the Bangalore Chamber for inviting me, and Ramprasad especially, in fact, this thing was to be held some time back, and then it got cancelled for some reason, and then he kept tracking me. You're sure you're going to be in Bangalore? I thought first an online session. Yeah, online, you can do it anywhere, right? Also this topic, ease of doing business in general, is very, very close to my heart, in the sense that when the current government, which is there in power, when it came in, Mr. Amitabh Kant used to head the, now you call it DPIIT or whatever, I don't know what it was called at that time. And we did, personally I did a lot of work on ease of doing business with the government at that time. Because at that time, India's ranking, today I believe the ranking has no meaning. Let me tell you, it has no meaning. Nobody looks at it. But at that time, that was the only way you could evaluate a country's performance. We were 140 or 150 or whatever at that time, and Amitabh was sitting there and saying, how do we go into below 100? I thought this guy is dreaming. So, because the pace of change is so slow out here. And then we realized that the World Bank only looks at certain parameters. And only 2 cities they covered, which was Mumbai and Delhi. You work on that, your ranking will improve. So anyways, so sometimes you need to know how to pass your exams. And somebody who's done CA knows that even without doing maths, you could still pass maths. It's creditable. Because then you just focus on, okay, I remember when I'm sorry, I'm going a little digressing a bit. I realized you have to get 40 marks in one subject to pass the whole exam, but you have to get overall 50. So I said, maths, I can't get more than 40. So those 2 areas, I mastered it. I said, I can't not get 40 in this. Forget the rest. So I think it's all about mastering that. Anyway, so I think ease of doing business, India's come a long way in many ways, at least, in perception. Because one thing I can tell you that perception is equal to reality. And in perception today with China where it is, I think India is becoming the destination which the whole world is looking at. 2 things. Another thing, very important. There are trillions of dollars sitting on global balance sheets waiting to be invested. Which country is going to get this money is going to be the country which is actually going to do ease of doing business on the ground, on reality, not on paper. So it's good to say that I've got all these rules, I've got all these regulations, people go in, it becomes a challenge. And I think that's what I think we all need to do. Secondly, India is technologically quite advanced in many things we do. In fact, the UIDA, the UPI, UPI is unique to the whole world. Nowhere, anywhere in the world, you can do a transaction at almost 0 cost. India is the first country on an India stack it got built. Now it's got to be exported. Because today, and I can tell you that the India stack, more work is done on it gets exported. I think a lot of the big tech giants are going to get worried as to how they're going to deal with it. And so UPI is a very, very good example. In fact, wherever I'm involved, I keep telling all these Australian banks and the CEOs and all that, look at UPI. I think it'll be something that could be a game changer for you. But I think we need to do more on the marketing side of it. So, like I said, the ground reality is where the ease of doing business has to change. So when somebody wants to set up their company, somebody wants to set up their industry, the kind of permissions they need. Problem with India is that we are growing so fast and the regulations don't keep change with that growth. You know, regulations also have to change. We're becoming very technologically advanced on one side and our regulation belongs to the bullock cart age. So I remember once, somebody came and did some inspection at our firm and I was there. And they said, you know, under the HR, under the people rules, you got to maintain manual register. We said, everything is in IT. Why do you have to maintain a manual register? But that is the rule, it didn't change. And you got to maintain it, then you're fined, and then you're pulled up anyway. So first, overall, I'd like to say, in order to simplify and create a positive attitude, you need to have any policy that is introduced needs to be well drafted. A lot of time needs to go into how the rules are going to be made and how you're going to announce that policy to people. And people should be able to understand it in the same way as I understand it, you understand, anybody understands it. It's not that 3 different people read it and understand something different from it. So the first thing, it should be well drafted, well thought of. You can't bring a regulation in and bring in 1 month 62 modifications. Doesn't work. And those set very wrong signals. And I'm referring to the GST, which came in with so many changes in it. And it is today one of the most complicated laws and complicated things for anybody to deal with and to work with, and creates a huge amount of issues. So they need to be, we said, one tax, one country, one tax. It's not there. You've got so many states, you have to take registrations, keep filing everywhere. A lot of cash gets blocked up. I think we need to change that. Secondly, we need to have a stable policy regime. You can't get up one morning and saying, okay, I'm going to change the policy. So you need to have a stable policy regime. In fact, you know, any government coming in should first say, no more policy changes. First, let me have what I've got. Let me put regulations into it and let me enforce it. Problem with us is enforcement is almost zero. So the policy is made, who suffers? The innocent, honest taxpayer or the corporate who deals with it, he suffers because he follows it and pays the price for it. All rules, whatever you make, any changes should always be prospective. And anything which is there when you started, it should be grandfathered. And it should be remain on, because you can't. I'll give you a simple kind of thing which happened. When GST first came in, if you recall, used to pay GST on the car. So on the lease rent, there was no GST. And a number of my friends had taken cars. Fortunately, I was not had any car on lease at that time. And they had taken cars on lease. So when the GST came in, they had already paid GST on the car. Now they were paying GST on the lease rentals also. And they went up to Mr. Jaitley, but nothing happened. Then the policy should also be the biggest problem that most companies today face is litigation, which continues for years on end. And I remember one CFO, she came to me and she said that, I'm not going to name the company, said we're such a small company, it's a multinational, but in India they were not very big. And our cases are going on and on. Can you not just close it off? I mean, like every morning I have to do my business or think of my litigation. So I think a lot of effort and time goes into litigation, and I think this is something that needs to really get dealt with. So on overall basis, this is what we need to do. We need to streamline the tax system, like I said. We need to reduce regulatory burden on people. And for this, I want to give you one small example. There's a very large multinational which got set up, and they were coming into India for the first time. And they're very big today. They are the biggest FDI investor in the last few years in India, by the way. I'm not naming the company, but they were in operation for about 6 or 9 months. Just before 31st March, 100 income tax officers come to their office, and they said that, why haven't you paid tax? So obviously, it was a foreign company. The CFO happened to be an Indian, so she went and dealt with them and said, see, listen, we're in operation for 6 months. Every item we sell, we make a loss because we want to penetrate the Indian market. So there's no question of tax. Then the guys just didn't want to move from there. So just imagine the intimidation to somebody who's coming in there, 100 income tax officers walk into an office, which was flagged off as one of the big FDI investments into the country, and you give them a very nice welcome. So I just want to put this point out there, because I think if you're not honest with each other, if you're not going to be honest about the issues and challenge the ground, we will never be able to deal with them. And I think that is something which is very important. Secondly, there needs to be consistency in the regulatory policy. So whatever policy you bring in, there should be consistency. It should be, how is it going to help the country? How are we going to move forward? How are we going to, so that's another challenge we have. Other problem that we have is our financial system is not very strong. If you look at our financial system, it still suffers from a lot of issues and challenges. Our markets are not strong enough. We don't have a mature bond market in India yet. So till we don't have a proper financial. Secondly, India many years back had something called Infrastructure Development Fund. There used to be banks which were infrastructure development. We got rid of it. And there's so much of infrastructure that is getting built. And the funding is totally mismatched. Infrastructure projects, as we know, anybody who's been in infrastructure will know it takes 10 to 15 years to start seeing the profit. And if you start returning the loan in 5 years, there's a mismatch. And all these great infrastructures we've got here, we have got so many beautiful airports, we've got so many, all the companies are sick. How can it be that you build the best infrastructure and the company itself is sick? So I think it all comes from the financing and the funding which needs to be changed. I remember at that time I was sitting in Mr. Naidu's office when he was the infrastructure minister. And I showed him that day only newspaper it came that China Infrastructure Fund was there and they were doing. I said, do you think China is a developed economy or a developing economy? He's saying developed economy. I said, if they can have an infrastructure fund, why can't India not have an infrastructure fund? And I think that is what is very important. And I think we still need it because look at the budgets we have, the targets we have. I mean, today we all get up every morning here, a new road has been built, a new road. I mean, great credit to Mr. Gadkari for what he has done on the roads and the highways, but a lot more has to be done because infrastructure is not improved. Long back in the 1960s, the US president at that time, John F. Kennedy, was asked as to why you're spending so much money on roads. And he said, today I'm spending money on roads, but these roads are going to help us make money. And that's what happened to America, actually. Because infrastructure went in, it went in. Secondly, we need to promote financial inclusion. Even the small entrepreneur needs to be able to get funding for his project. This is the biggest challenge we have. And if we do not get them funded, there are going to be issues coming out. And I think that's the reality of life. And they need to be brought into the lending system. And people need to provide the funds to them there. The other one which is there is intellectual property. Intellectual property, today we know our biggest differentiator is going to be the uniqueness of our product. And that is what is going to help us win the game. And whether you're a small company, big company, medium-sized company, if you've got something unique, you should be able to protect that product so that nobody else can make a spurious product or copy it or do it. I think our intellectual property needs to be definitely improved. Then we need to, of course, streamline, digitize, harmonize, and standardize all the reporting templates. We spoke about reporting. I think we need to get all those reporting templates. See, just imagine, we've got so much information and data going around. Why can't there not be a central repository of all data, and whichever regulator wants to, he can pull out that data? I remember, so today, if any of you sitting in this room think that you're making transactions and income tax doesn't know about it, they know every single transaction that you do. It is recorded. If it is done through the system, every single transaction of yours is recorded out there, and your assessing officer can have a look at it. So I just want to tell you that in case you didn't know. Then they should also, one other good point is they should reduce the reporting frequency. Our reporting frequency is so quick. We need to report on this at a very quick frequency. I think if you elongate, people can concentrate on doing their business and not on. And secondly, they should also adopt risk-based reporting. Risk-based reporting, I mean, not everybody needs to report everything. If your risk is come up to a particular level, you can report less things than what anybody else can do. Similarly, smaller organizations should be asked to report less than what the larger organization. So everybody should not be put with the same brush because it becomes a problem. And then I need to finish. Okay, so simplify the GST reporting. I've spoken about it. I think it's a big burden on everybody else. And we should provide clear reporting guidelines whenever we are doing it. And of course, we should use our automation and data integration that we have got. The one more point which I thought I'd leave a thought out here is, why don't we look at self-certification? That, the companies, certain data the companies can certify on their own. You can test check, you can check it out. You don't need to check every single information. And also should allow third-party validation. So that a third party validates the data, gives it in, so you don't need to go and do it. And the other one is there should be a continuous dialogue between the industry and government to understand how we can simplify the reporting and not create the continuous process, because till you don't hear the other side, both are sitting in their own thinking it's there, so I think we need to improve it and do it. So if the government can make it easier for business to operate in India, India will be sitting on the top of the global economy. China is a bad name today in the world. This is possibly the best opportunity for India to move from hype to reality, to a reality where we can become maybe the number 1 or number 2 economy in the world. We've got everything going for us. Our macroeconomics are right, everything else is good, but we need to ensure that this ease of doing business, the regulations and the reporting are in line with what other countries and other governments actually require, and not expect a small-time trader. We will hear about it today. There will be some panelists who will talk about it. Small-time traders have to close down their businesses because they can't keep up pace with the regulatory requirement. So I think we need to help. And if you see, India's GDP growth or job creation is done by the SME and MSME sector. They are the job creators. They fuel the economy. And I think we need to get them back on track and support them in their work. Thank you very much.
May I request Ms. Smita Par to give her address, simplification reporting from CEO perspective.
Good afternoon, everyone. I don't know if the timing is right. Pankaj gave me the post-lunch session, but I'll try and make it up by making some sense on the subject that I speak about. First of all, it's my pleasure to be here. Thanks BCIC and thanks Pankaj for inviting me. What I'll be speaking today is, can we have the presentation, please? I represent an industry, no, the presentation, yeah. I represent an industry which is 50 years old. I'm now working with a company also, which is 50 years old in India, and I'm now working with a US-based multinational company which just celebrated its 50th year. And I've spent about 25 plus years in this industry. So you can feel free to compliment me that I look younger during the break session. So I just wanted to talk about, what this industry is all about and what is it that, yeah, you have it? No issues, I have it on my mobile, I'll, refer those slides. Subject being ease of doing business, I would just want to relate it. It's, according to me, it's deeply related with government's perception of that particular sector. The classic example, before I go about a CEO's perspective on what is happening and not happening in this industry and what could happen, but just look at it, when the government saw the opportunity in the aircraft leasing business, we saw a lot of changes happening over here. This is something that, despite we being the third largest, in terms of civil aviation market, and third largest air traffic passenger in the world, but it's only recently when the government recognized that there's a huge potential over there, and some major changes have been brought over here. Can you help me pass me my glasses? If you yeah, sorry about that. Thank you. So I just want to make, these are some figures from the government sites only. I just want to make, representation of that. When the government identified that 80% of the fleet is under operating leases, the finance minister notified aircraft lease as a financial product that could be transacted in the gift city. It announced streamlining mechanism through single window for registration and approval from IFCA, SEZ, SEBI, GST, and authorities that's a step in the right direction. The policy changes enabled through Internal Financial Services Center Authority tax exemptions were granted. These changes are a game changer and an enabler with the vision to develop aircraft leasing. India is a global hub for aircraft leasing in the world. So I think anything about ease of doing business is all related with when the government recognizes this and there is an opportunity, we see that changes are made. And I know I met the lady over there, Mrs. Vandana Agarwal. Amazing work she has done, and we spoke about this in length because I've spent a lot of time, my entire career rather, in the leasing industry. And within 2 years, she worked relentlessly and brought about these changes. And we see this today happening. At least 25 aircrafts have been leased. And a lot of things about ease of doing business is a classic example in the aircraft leasing space. The submission that I want to make through this forum is that why restrict it to one asset category? There are many, many other asset classes, be it in the rail segment, be it the commercial vehicles, the auto, the technology equipment space, the industrial machinery, plant and machinery. Similar thing can be drawn because there are classic examples in the rest of the world where this alternative financing, leasing has been used to actually bring about sustainability in the economies during the lean times. So what we really need to do is, are we really missing out an opportunity? The point that I want to make over here is, asset financing industry focus has somehow been missed and it has always been subsumed in the normal lending space. Whereas in the US market, in the Europe, Japan, even smaller countries, they have recognized asset financing and within that leasing as a very, very special and niche space and actually developed it, and which has actually brought growth to the economies. What I would like to say over here is India, despite having the highest potential, why do I say so? We have been hearing about it, 1.4 billion population, 3.5 trillion economy, and much more scope to grow. The penetration rate of leasing in other economies is anywhere between 28 to 45%. In India, it is less than 1%. Which is something which is need to be brought to the notice of the government, that why this has not been given when it's actually generating capex in the economy. You're just shifting the capex to the opex, but the investment is happening. And there are classic examples in the world where people have actually set up in other countries, brought that knowledge, it actually brings investment flows, it brings knowledge transfer, and you're moving from the traditional asset lending to the entire asset life cycle solutions. We know of so many instances where the government has had, where the lenders, I would say, the banks have had problems of not knowing the asset categories, and when they had to repossess, they actually did not even get them 10 to 20% of their total exposure. But when you have this knowledge transfer coming in by seasoned players or the global players coming in, who bring this knowledge about the entire equipment lifecycle solutions and then convert the normal lending to the alternative financing or asset financing or leasing, and you see the difference at what growth it brings and what kind of capex can happen, which our Prime Minister has also been talking and everyone has been talking about generating more manufacturing activity, more equipment and everything in the market. So I think this is one opportunity which is being missed. Something about knowledge transfer, investment flows, and through the OPEX solutions which the government could be looking at. The point that I want to make now about the ease of doing business, the challenges that we faced. We all know that yes, India was a tough market. Imagine a company like ours only, which has been there in the market for 50 years. Today it is there in 50 countries. But my MD always tells me, Simi, it took us 45 years to decide why we should enter India. Why should it be so? We just entered India in 2021. So it's only until GST came in that they realized that, okay, there is some potential and now we should not be ignoring. And it was rather a more push from the customer side, the global customers, the multinationals who have been here, be it in the IT space, FMCG, healthcare, who used to wonder that why a company like yours with such large global presence is not able to service us over here. But the reason was the ease of doing business. They always felt it's just the pain of doing business in India. But yes, things have changed. And when we entered, and soon later, within a year, we saw 2 global players already entering the market. And that's something, the precedent that this company could set. But yes, there is still a lot more to be done. Through this forum, what I would like to really mention is a few points. Recognizing this, just as they did in aircraft. I'm not even saying a global example. Just as they did it for in-house in India, recognizing leasing as a product and giving it recognition as an industry. Seeing it as an opportunity. Are we really missing out an opportunity? Why should the leasing penetration just be 1% when we are talking about India being the manufacturing hub? Licensing approvals. It's an equal treatment needs to be given. Today, when I meet very senior officials at the government level, it's surprising for me that, many a times they do not even know the difference between a finance lease and an operating lease. This knowledge is missing, the education is missing. How would you classify it? Now, at the same time, an Indian company, when its assets and revenue is less than 50% of the total income, it does not require a financing license. But when it's a foreign player, it requires. But the point that I want to make is that when the knowledge transfer will come from there, how can we be a deterrent to their entry? So this is extremely important to have this recognition done, that it should be a level playing field just as it is for the Indian companies, if the same thing is given for the foreign companies as well. You spoke about certification and other things and self-certification. Yes, I do wonder, and I know we are often facing these challenges. We have floated one company to obtain the finance lease license. It's been 2 years in the waiting now, ever since we started. We have not yet got the responses. We have only got queries. And you'll be surprised to know that $500,000 we have already spent without having a single rupee revenue. No offense, just paying the big fours. So for all the, Pankaj, don't mind that. I know a lot of KPMG, but just getting those certifications, that's it. And what is it? What's the certification? My balance sheet only has capital invested by the company, and it's deposited in the bank. I cannot do any financing activity, but I have to produce a certificate from the auditor. Yes, this money is there in the bank. A bank statement is not a proof. The same auditor who signs a balance sheet has to give a certificate every 3 months. Yes, this money is there. And charge me, you know that. So this is the, when we talk of ease of doing business, these are some of the areas which need a deeper concern, deeper reflection. And do we really require such certifications and filings when there is no activity happening in the company? And even when the activities are happening, it's stated in the bylaws, we are not taking any public deposits. I still have to file a duplicate return. The balance sheet does not show anything. It's certified. It's signed by one of the reputed auditors. But I still have to file a parallel report saying that, no, we have not taken any public deposits. And again, shell out a fee. So this is what is happening, and I think a lot of work needs to be done that. The balance sheet is nothing but a statement of your assets and liabilities. I still need to file a certification, foreign liabilities and assets statement, which states the same thing what is stated in the balance sheet, but a separate certification. So these are some areas. Yes, GST has simplified a lot of things, and it has brought companies, foreign companies here, and much more, many more will come. Until then, a lot of people were very much resistant. As I said, that it took 40, 45 years for people to come here. Those who came wound up, the BNP Paribas, the Macquaries of the world, because it just couldn't cope up with the tax complexities related to leasing as a product. But, finally now that at least GST has taken care of a lot of things, but there are still a lot of anomalies. See, lack of, opportunity, seizing an opportunity, or lack of education on the subject also causes these problems. There are certain clauses in the GST which are linked with the depreciation. You can't, put in the same breath an IT equipment which has a life of 3 or 4 years with a plant and machinery which has a life of 15 and 20 years. But those challenges between not able to claim, if you've claimed depreciation, then you have to reverse charge on GST, has been put across all assets. So it's very, very important that government recognizes asset financing as a separate subject from the traditional lending. It's an alternative to lending and, gets its due recognition. It's high time we get that. Likewise, there are, the priority sector lending. Same MSMEs can be given through a lease option who are always starved of capital, who do not have any alternative methods, and it actually brings growth to the MSME space. But the priority sector lending, treatment is not available under the leasing arrangement. So these kind of things, the stamp duty anomalies in each different state, it's different. I think some of these issues, if which are addressed, which actually can bring a lot of boost to the economy, and the government will see the benefits, and there are enough number of case studies. So my only submission through this forum is that there's a popular saying which goes as, it's good to know the law, but it's always better to know the judge. So here, it's good to know the lending and the normal lending space, normal financing space, but probably it would be better to know the alternative financing space. Thank you very much.
Thank you, madam. That was pretty insightful and extremely good. And you've given a great hope to our $3.5 trillion economy through this leasing option. I now warmly welcome Mr. T.K. Sridhar, CFO, ABB, to give the perspective, CFO perspective. Yeah.
Very good. Good afternoon. My job is easier made by Simi because she has made everyone of us awake, right? So I need not this one, right? Okay, thank you. Right. So, but anyhow, I have my mobile on hand because just to make sure that the things are in backdrop, right? So I think I come from a manufacturing background. So what I'm going to take you through is first I want to avoid a presentation. I think we had a bit of a brainstorming within us. I said that we will directly talk. But then I said, yeah, coming over here, and I need to make some points and leave some points in the minds of the people, so better I have something written for all of us for the benefit of everyone. So I think from the audience, I think I have quite a few entrepreneurs, quite a few professionals over here, and also budding students. That's what I gather from the audience, right? So what I'm going to talk now is some of the practical issues, what we face. It's not going to be something which is policy related, which is at a different level altogether. But as operating companies in India, what are the hardships which we face when we are actually running an operations this year, right? So this is something what I'm going to talk, and believe me, I have only one slide, okay? But quite a bit of points in that, okay? So, but we have come a long way from where we were to where we are today, right? I think we cannot take away the credit of the steps and measures what the government has done in this particular journey. And as everyone was saying, running a complex country like India with a digital platform enabling it, I think is in the right step in the direct direction. So I think, let me tell you, so because India is definitely now a preferred destination for investments, right? So that I think all of us believe that next to China, India will be the next place, and so on, and every company wants to invest in India. So, but when we want to invest, what we want is really to do something which is simpler, something which is practical in all aspects for us to do, right? So what I'm going to try to sort of pinpoint in this one slide is 4 topics which are core to any organization when we run a commercial operation, right? The first one is, of course, the corporate loss, right? So this is something all of us know, right? We deal with it day in and day out, right? So this is small, so let me sort of enable myself here, right? So I think internal finance control. This is IFC is a mandatory topic which is to be done by quite a few manufacturing industries, right? And only very small industries have been sort of not required to do it in same intensity as what it is, but all other companies have to do it. But let me tell you, why I'm bringing this point, even though I can do it for my company, is because this is a deterrent for me to onboard certain companies who are smaller in case, because we have a due diligence process which makes us actually mandatory to look at those points. just in case if that has been made a bit simpler for the smaller industries, it gives us more options to give business and promote, trade within the country. Right, so this is very simple. Actually, I mean, we need to look at what is the sort of the topics which we deal with internal financial control, and probably increase the threshold and the manufacturing sectors where it is required, and probably that helps larger manufacturing setups like us to onboard quite a few industries. What does it help? One, we give definitely chance for them to participate in the total business scenario, right? And number two is that our products become more competitive, right? And that competitiveness definitely helps us to attract more business into India. So this is something which is simpler, but I think it has an long-range benefits as they come. So next one, I think this is something very hot topic over here. Data backup and trail, right? We said that technology has advanced, and we want to have backup in the cloud. Right? So what we say that data should be available in India. I can tell you to run this, to get that particular, when we have multinationals like us, and when these data is up in the cloud, and to bring a data out in India is so cost ineffective. Right? And the technology and the internal control on that particular point is something which we have not experienced. And I think this is something which the government has endorsed it in some good faith, but it's very difficult for us to do it. So this is something what we thought that we should be as an area for us to improve. Hopefully, yes, SAP develops a solution wherein we could get that particular backup in India, right, even though if it is stored in abroad, but that comes with a cost. Why this cost? Actually, that cost is something which is hampering the profitability and performance of the organizations, right? So, but accessibility, yes, true. With that data should be accessible, and that is ensured. So as long as it is accessible, so why should the data definitely be stored in India when we are talking of better technologies which are storing outside India in a cloud? Not necessarily there. And the next point which I have is around very interesting topic, related party transactions. Right, so in all board meetings, right, so the cows can come home, but this discussion will not stop. Right? So I think, we say that an organization has a percentage to which it could pay to the parent companies. But to prove that it is at arm's length distance, right, and in the normal course of business, I think I had to sweat every time the board meeting. Right? I could understand for large M&A transactions, large sort of complex structures, this has to be done in quite a bit of intensity. But even for doing a normal purchase or sale or a service transaction with a group company, the amount of efforts which every company takes to prove it, right, to the independent directors and to the shareholders is humongous. It's just actually the amount of documentation which we bring to prove that this is an arm's length distance. I have KPMG as my auditor. But for the transaction verification, this third party related, I need to have another independent auditor to tell me that these are all there. What does he do? He does only what I tell them. But the, right? So, but the board gets comfort. I'm not this thing, but why is this being done is because there is a responsibility on the board, independent directors, to certify those particular transactions. Right? I really pity the independent directors, but after 5 years, I also look for that role. Right? So, so that's one thing. The next very interesting thing, unspent CSR account. Right? Very good. I like the smile on all other faces. So I need to go back to a vendor to whom I have already given the money to spend on CSR. Guys, you are not spent. The project is on, but please pay back that money, right? So I have my company secretarial team colleagues sitting over here, and they will say, if you don't follow this particular rule, it is a non-compliance to the act, right? And you have foundations, you have various structures over it. I think the clarity around this particular topic is something making life difficult, right? So I think it's we try to do CSR in the right earnest, to make sure that it is given back to the society in some good form. But what happens is with these particular rules, we go back to the vendor who are again small guys. They would have invested money in the market somewhere. So I need to come back and say that you give me back that money. Otherwise, I need to allocate myself and keep that money in a separate unspent account and monitor that, keep monitoring it. Right? So this is something. And the next interesting piece, 30-minute window for publishing to the stock exchange. Right? By the time I get my document signed, it's still 15 minutes. By the time I get the auditor certification on that, is another 10-15 minutes. And by the time I go there, the server is down. Right? So it's a very interesting piece, right? But if I don't do that, then if I do it on the 31st minute, Mr. Stock Exchange will come and push a query to me. Why did you file on the 31st minute? I mean, it's pretty interesting. I think we need to really understand what's the practical topic around this particular amendment when we do, right? So this is one of the things which I saw coming up in the corporate this thing, right? So the next piece is around the indirect tax. This is also pretty interesting. I think this is a very practical situation what we have, right? So I think we have a lot of registration, places of registration where we do the business. We have 26 states, right? So everywhere we have registration saying that this is the place of business, what we do. There would be credits lying over there, but I cannot utilize that particular credit because I don't have a sale over there, right? I mean, why? Of course, I expect that as GST was implemented some time ago, and as and when it probably comes back, it matures, we probably get it under a pan so that we are able to cross-utilize these particular credits, right? So then this really helps us to effective management of cash, right? So then the money which is locked in that particular state, we need to again refill it back to get that particular credit back. So then the other thing is requirement of temporary GST for registration for overseas companies. If any foreign company has to come and render a service, I need to do a temporary registration for every service what I do. I think this is something which we thought is an area, if it could be improved, it could be better. So what otherwise what companies do, they supply the material and tell the local company, you do the service. Right? So I mean, but the customer is not happy because he does not get the value for money because certain equipments have to be established by those people who are technologically trained in that way. Right? Then the next is statement of invoices, which is linked invoices to be made available in portal against GST TDS. Right? I asked my GST guys, same and the indirect tax team to understand, okay, where do you spend time? So everything is okay, but you know, I need to have invoice-wise details when the TDS is deducted, and that is not available in the portal, so I need to make it manually. Right? I think this is something which really requires an urgent treatment when we are working on it. And this also applies to the 26AS form where it is not available by the invoice-wise, but the assessing officers require this data invoice-wise. Right? The person who makes the rule makes the document, but demands the other way. Right? This is a classic example. Then we have fantastic faceless assessments. Very good. We have benefited, fantastic. We have benefited. It's not a problem. Our conveyance expenses have come down, right? No doubt about it. But what has happened is there is a query. We send the query to the document to the department, but there's another query which doesn't take into account the reply what we have already given, right? I think this is something which there has to be a bit of a trail around this particular topic. So the next is the one, I mean, this is something which is, sorry, I think this is missed out. Okay, so others. We have moved to GST. GST is already more than 5 years now. But we have sales tax of 20 years pending, right, litigations. And my money is also spending. I mean, engineering companies, when they do execution, you have different transaction topics, right? Works contract tax, everything else. So, so these particular monies which are pending and don't get addressed, right? So we have to create documentation, preserve that documentation for any calls at any point of time. So this is something which we expect that if we are moved into a GST regime, let's find a solution for faster closure of the sales tax cases. Even in amnesty scheme is okay, I'm ready to pay and come out. Right? So because I already paid advance, so I think at least I could limit myself with that. Okay? So that's one thing. Then, so other thing which I already said, bank guarantees is a big scope. Right? I think, sorry, So bank guarantees we issue, so we have to go to the bank, get the bank, and then give the bank guarantees. There's a big scope if we could digitalize this, right, to saying that the bank issues, because we have SWIFT, we have quite a few technologies from fintech companies which could develop these technologies for us, then it could help us really, manage this particular exposure effectively. Last but not the least, I think MSME vendors, they have a trade scheme which is basically for the financing. So if that could be, we would expect, because even companies have their own financing schemes for them. If this could be integrated, it could be a lot of help so that it could smoothen the process quite a lot. So this was the last point and one slide. Thank you very much.
Thank you so much, Mr. Sridhar. That was excellent, well-elucidated presentation covering corporate laws, direct, indirect, and also the other contractual matters. Points well noted. We will definitely summarize it in our memorandum to the government. May I request Mr. Jagannath Chakravarti to give the CFO's perspective from services sector for simplification reporting. Yeah.
Good afternoon, all. Thank you for this invitation. It's very nice coming back for the BCIC session after a couple of years now. Very happy to be back here. I remember working with sir for 3-4 years continuously and did a lot of programs here with BCIC. So very happy to be back here. So it was very interesting to see the perspective of how the regulations have come a long way, but still falling short in many of the places, right? So before getting into that, I want to ask you all, do you think ease of business has improved? So we have done quite a lot of things have done. I want to give an analogy here, a real life analogy here, which actually gives a view of where we are in this ease of doing business. Some 20 days back, or 10-15 days back, I was attending a program in Mumbai, where our road transport minister, he was part of, Mr. Gadkari was part of he was the chief guest of the program. So at the end of the day, there were question and answer session, and fortunately I was sitting somewhere here in front of him, so I got the mic for asking the question. So I asked him the question, sir, I'm very, very happy about the improvements in the highways, very, very appreciative of what you have done for this country. We are very, very proud when we travel abroad. We still say that our roads have improved far, far, far greater in the last 6-7 years. I know I'm coming from Bangalore, from Mumbai to Bangalore, I will have roads where I can travel in 5-6 hours. It's going to happen. I'm very, very confident of that. But after reaching Bangalore, it is going to take another 5-6 hours for me to reach home. When will that change? I asked him. He said there is no scope. He told me, Bangalore is a very complicated metropolitan city. It's not easy. He told me. I was shocked. Said it's not going to be easy changing the Bangalore's traffic because it requires a lot effort and multiple steps required for that. And he was very serious on that. Okay. So that's what happened to this ease of doing business. We are there, but we are not there. You are in Bangalore, but you are not reached home. Okay? That's where we are. Many steps have been taken, but it has also added to the complexity. If you see, the last mile ease of doing the business, right? People think that ease of doing business is tax regulation, corporate law, something. Ease of business, because you have to think 360 degrees. Please don't see one or two. You have to see all angles of it to make it happen. I will give some cases where this happened. SCZ regulation was brought to benefit of the export companies. Okay. Now all of you know that after COVID, none of the IT companies have full attendance. Okay. Nobody wants to come to office. That's a fact. Okay. So we ourselves are saying quasi-working model, that model and all, because we don't have a face. We can't force them to come. That's a fact, right? So I have an office space. I have an India business. I have an export business. I want to use my office space to save costs. Because business, making profit, saving costs is part of a business. I can't do it. Why? Simple SEZ regulation doesn't allow that to happen. So government realized that this is happening. All real estate companies lobbied with them, and then made government bring in an announcement in budget saying that this bill will come. It's going to come. It's not come. Reason why? Because there is a conflict between Commerce Ministry and Finance Ministry. When it will come, we don't know. And all properties are lying vacant. SEZ offices, all properties are lying vacant because nobody uses. And I have to hire another place to run my India business. Simple. So the challenge is very, very complex. The last mile, we make it easy. Sometime back, the RBI changed the regulation now. Till last year, you buy a company, acquire a company in US, and it has an Indian subsidiary. You can't buy. You require RBI approval and they don't give it. Because they consider this as a rerouting. Why this was done? So what happened? I acquired a US company. I acquired the Indian subsidiary separately. I acquired a US company separately. Separate to valuation, to this thing. So complicated for a small acquisition, what I have to do? RBI has changed it now. Subsequently, after all the feedback, they have changed it. What had it happened is, during the COVID times, I know a senior guy, he was trying to bring a US medicine from COVID vaccination to India. The only reason he could not do it is because of this rerouting problem. The last mile, we don't know how to finish it. We will make a very, very grand statement.
Going the extra mile.
Extra mile. It will not be there. It will not be there. Some problem or other will come. Everybody spoke about GST. I appreciate GST to the extent that everything is online now. At least government is thinking on IT-enabled regulatory enforcement instead of manual. They are thinking IT now. To that extent, it's good. Very appreciative of that. But what happens? I do business in international market. If I don't get the money within 180 days, what will happen? I have to pay GST here. Why? This is considered as a domestic transaction. Doing business and not collecting money is a part and parcels of doing business. It's a bad debt. Why are you paying GST on it? I can't convince my boss. That's the biggest issue. He says, what are you talking about? He's sitting in US. He says, what are you talking about? What regulation is this? This is like funny things people do. The last mile finish is not there. We don't know what is happening in this. The biggest problem on all these things, what I feel is, the regulation, somebody was talking about implementation is very poor, right? I agree with that. Regulation implementation may be poor. But taking punitive action has gained a lot of momentum now. Because of that, everybody fears. There is a fear in the system, I'm telling you. Fear in the system. I don't want to quote one of the big four. They have completed the audit, numbers are cleared, but they will not sign the balance sheet. Reason? They couldn't finish the audit document. Why is that? Normally, after the board meeting, number finishing, they will work for 1 week to finish all their audit papers, right? They are saying, no, unless I finish the audit paper, I will not sign. Because one case happened, somebody was caught with that paper not being there. Now, no, I will not sign. What should happen for that? For that sake, I have to defer my board meeting. And answer the entire directors, what is the reason? Punitive action, they are fear for it. Anything happens, if you take some action, first of all, another one important thing that is happening is, any regulation you bring in India, there is a new interpretation for it. How to beat it. What has happened? Government is now got it. They you are taking this step, I am taking this step. You are taking this step, I am taking this step. I will ensure that you are caught. They are ensuring I will beat you. Who is suffering? Business is suffering. At the end of the day, business is suffering because of this. I may be making, in a jovial term, I may be telling, it's a very serious issue. Because of all these punitive actions, every element of it is a question. Every element. Anything you do in a genuine way also is being questioned. I'll give one more example on a punitive action for on professionals. I don't want to name the company. Insider trading, one of the senior business guy hasn't disclosed the trading in the share ahead of time. Okay. So company secretary also came to know, and she doesn't know what to do with that. She took some time to validate and all these things and then reported. Done. Disclosed, everything done, stock exchange reporting happened. After 6 months, SEBI taking action. Company is penalized for 2 lakh rupees. The person who did the insider trading was penalized for 2 lakh rupees. Company secretary was penalized for 5 lakhs. I'm worried about taking any action now. Being a CFO of a company, it's like always worried. What will happen on me? This is not the good environment, right? Punitive action has to be taken to implement some regulation, but please be fair on the way it is being implemented. My request to BCIC is, please take this up. Don't implement to go behind people just to punish them, right? To make things correct, it has to have a consequence told about that ahead of time. Recently, we did an acquisition of a company. I have $100 million of money in India, but I have to borrow in US. The reason is because there is some documents when RBI transitioned from manual to system in 2007, they have not updated. So no RBI permission for remittance. Nothing can be done. I have to accept this. This is the fact. Huge interest costs. Why should I pay money when I have money in my bank? So then somebody suggested me, why did you bring all money to India? Keep it away. How can I keep it away? Create transaction structure in a way so that I can keep money there. This is what is, so by doing an implementation, they are encouraging people to go in the way they can go in the otherwise, right? So that, it's not a correct. I want to do it. Want to be right in my mindset, follow the regulation, follow the process, and do a good governance business. If that is not, your government is, or regulation is not helping, then there is a change required. Forget about everything else. A genuine person who wants to do a correct business should be allowed to do the business. If it is not happening, then there is a change required. That's the only concept I have. And somebody were talking about the litigation in India. A big litigation for me, 300 crores of litigation. We fought that at the appellate tribunal level, then to High Court, then to Supreme Court. Supreme Court gave a favorable decision. We thought, oh, done. 20 years of litigation is done. Government went and said, Supreme Court review petition. All case appeal, everything gone for toss, now review is pending. 20 years of waste of effort, right? So still fighting the case. Now, the litigation has become so huge for me, I have one team only handling this litigation. Various situations, right? Somebody was telling about bank statement not being accepted, only some auditor has to come and confirm. Yes, madam, you mentioned about it. That's a fact. Because why this was not accepted, why an auditor certificate required? Went back to Satyam Computers, they produced a bank statement also. We know how to beat the system, right? We are also responsible for it, right? We know how to beat the system, so government brings a regulation. That's what I was mentioning. Between professionals and government, there is a fight going on. You are smart or I am smart. You are smart or I am smart. Any regulation in India has a background of a fraud. Any regulation. That's not the basis of making a regulation. That's what you please assume that your citizens are fair. So your citizens will follow the regulation. Then bring in an exceptional management to take a punitive action on people who defraud. That's the basic approach of any regulations, right? Having said all this thing, it has come a long way. I should also close that, right? The time I spent on compliant 10 years back, the time I spent 5 years back, time I spend now, it's definitely improved. Definitely improved. The automation and IT enablement in this government has definitely helped all of us. 100%. The IT enablement was a big revolution for Indian government enforcement, actually. If it is not there, we can't be so easily managing the situation. But my point is, you are there, but you are not there. Please ensure the last mile is made easy for the business. If not, who is the sufferer? Business is the sufferer. Professionals are the beneficiary, government is the beneficiary. Who is the sufferer? Business is the sufferer. I represent business, I am not representing the profession here. Because I am not able to explain in front of my board or my management, my business heads. Why this is not done? Every question, it gains an importance to me. I still have the control, all these things. I quote some regulation and have controls and all these things. But what happens is, after a stage, they are all bored. They say that you are only talking this complaints, that complaints, this negativity, that negativity. You are not talking anything on strategy, how to make the business grow. Okay? So that should not be the situation, right? So the point I want to highlight is, make the last mile easy, and please make a genuine regulation for the genuine business who is done. Don't do business for the exception who do defraud the system. That's my request. And also there is a request for professionals, all my professional colleagues, practicing professionals and consultants. Let us take the spirit of the regulation and at least for some time help our customers, clients to meet the regulations, right? If we start interpreting in a way to beat it again and again, then it becomes very difficult for their running the business for that. Okay, I know some people may or may not like this kind of a statement. I'm not saying everybody. Please don't mistake me. My regulation is there are exceptions to everything, right? So on that I'm talking about only for that 5% people who do all this thing. Please don't mistake me on that perspective. I have a huge respect for people who are in the practice. You have been the pillars of running the business and pillars for making these ease of doing business here in this country. Thank you all for your support. Thank you all.
Thank you, Mr. Jagannath Chakravarti. 2-3 fair points. I think the first one would be the last mile connectivity, which you said, and then you also said IT enablement has helped this thing. And on behalf of the professionals, I can assure you, sir, we'll interpret the law straight and for the benefit of the business. With that assurance, may I invite Mr. Vijay Vishwanathan to give his perspectives on simplification reporting from a practitioner's perspective. Yeah.
Good afternoon, ladies and gentlemen. Mr. Chakravarti said that we have come to Bangalore airport and we are not able to reach home. I think that's the last mile. This reporting is the last mile focus area so that we can reach home much faster. And I think I will try to address that particular subject. He also said that we are unable to finish, and India has a problem of finishing. I think we have Dhoni now. I think we should be able to finish. We should target to finish it very successfully. This, I'm focusing on reporting, so which is a very integral part of this ease of doing business. Before we get into the details, I think it's important that we understand the ecosystem in which we all live. And it's also a legacy issue. I think still we have not been able to correct ourselves. That's my honest opinion. I think our ecosystem is, we are living in a system of mistrust between a business industry and the government. I think this is a serious problem which we need to tackle. Because if conceptually, the foundation is not changed, I have a problem that we'll continue to have a problem of the ease of doing business. Look at this, what we having, the notices, investigations, raids, etc., etc. It suggests some serious issue in the system, I think, which has to be seriously corrected. I think we need to primarily focusing on reversing this particular the ecosystem. All over the world, the businessman industry, their DNAs are same. They want to maximize the profit. They want to minimize the tax payment. I think that's a That's a DNA of any businessman. So it happens throughout the world. It doesn't happen only in India. It happens throughout the world. But why is that? As a government, the business industry is the biggest enabler and facilitator of the GDP growth. So when you have to treat them as a partner in your objective of, we are talking about 5 trillion economy. So it's not going to happen without the participation of the business and industry. So keeping that in mind, my recommendation to this forum is to strongly recommend to the government. I think it has to be a sustained effort. I don't think the government is going to listen to you immediately. It's going to be a sustained effort in changing the mindset of the people across the governance system. The major challenge in this reporting system I see is that as practitioners we come across, there's a lack of objectivity in the reporting which is being demanded. Not all the time, sometimes. In fact, it's changing. One good thing is, definitely we are seeing a change over the last 10, 15 years. Definitely we are seeing a change, but the change is not enough, because as in the morning we heard another speaker saying, in about 15 to 20 years we'll be able to catch up. No, that's not going to be enough. It's too much of a time for us to catch up, because we will lose the opportunity in term. Because India is sitting on a particular platform where it has all the ingredients available to capitalize the greatest opportunity. And if you don't do it, if you take 15, 20 years to come up to the expectation, it's not going to help. So we are going to be behind. So keeping that the objectivity in the reporting system has to be very well defined. What is that? Today, you see every department is asking for some reports. Every person is asking for, as Mr. Chakravarti said, that your rule is this, but you ask the assessing officer, he wants a report in a different form. So we have to have the objectivity very clear. It has to be well defined before you ask for a report. So that's has to be clear. Secondly, there has to be a stability in the reporting system. That is another problem we all have. There's no stability. I'm talking about all the negative aspect. There are a lot of positive which I'm not talking. I'm only talking about the negative aspect. There has to be stability. You ask for this report, and the reports keep changing. Either the templates keep changing or the reports keep changing. The reports get elaborated. So why can't we have a stability? The stability is another issue we should focus on. Then it should be easy. It should be easy to comply with. So because this is almost all we focus on MSMEs for last 50 plus years, and we know the pain points of the MSME. Of course, the larger corporates have the ability to have their own team focusing on compliance. That morning we heard somebody saying that we have an exclusive team for the sake of compliance, which bigger companies can afford. But look at MSMEs, which again we heard that MSME is going to be is the backbone of this Indian economy. So you have to make them, you have to support them, you have to make them feel it easy. So the reporting system should be is some that it is easy to follow, easy to comply, and it should be quicker. Today we have everything is driven through technology, and most of the times our servers are down and we are unable to do it. Servers are slow. There are a lot of technical issues. So it takes long time in finishing the reporting. Then we see in our reporting system is more reactive than the proactive. I think because as I said, somebody has done a fraud, start a reporting system. Somebody has done a manipulation, start a reporting system. Why can't it be proactive? Why can't you think? Of course, the government knows Indians very well. So why can't we think that this is what possibly might happen? This is what possible situation. Why can't you have it? So this will also give us, total stability. Because if you start being very proactive, if you get stability as well as the objectivity very clear. So this is the, and our biggest problem today we have is the technology. I think the biggest bottleneck challenge, if you can tell me, if you ask me, one single factor which is making this reporting very difficult and challenging is the technology. We have come a long way. We have come a long way. It is extremely admirable and appreciable that we have adopted that. We have embraced technology for the purpose of reporting. But unfortunately, the technology is not in good shape. Let's face it. Let's admit it. It's not in good shape. There are so many. I don't want to get into so many instances what we go through. I think all people who have actually experienced in reporting in front of the computer, they would they would be able to appreciate how much of challenge we have. We have a challenge that a field you enter a data, you enter a thing in the field. It behaves very erratic. Sometimes it does not validate, sometimes it does not accept, sometimes it doesn't save, and you have to exit, you have to come again, you have to log in again. Even the login, in fact, in user ID, just giving you one simple example, user ID registration for the income tax purpose, it asks for the first name, last name, etc. So many of us don't know that because the first name, what we have entered in that permanent account number long back. There is no way, there is no gate. Because once you are given a PAN number, in my opinion, it automatically should take the first name, last name automatically. It doesn't happen. I have to enter the first name. Even if a spelling A is missing, it will not validate. So sometimes the people have a different way of writing the first name and last name. Sometimes I say Sridhar VK, sometimes Sridhar Vishwanath Kumara Mangalam. So the different, you write differently in passport, differently in Aadhaar, differently in PAN, differently in bank. So you yourself don't know what to, and it doesn't permit you to validate, there's no help available. And you have to go through all permutation combination. And when we do for our client, we ask the client to hold on to the phone. We ask him to keep remembering what all he did. So I'm saying this is just one of the possibly 150 instances of problem we have. I have a list of 4-page list of the problems, glitches we have. So issue is that the technology what we have, and the technology, the problem is that in India, if you have income tax return, just today we have come a long way, but if you are not able to finish up the return on the last day, you are gone. There is no mechanism even to file a manual return if you are not able to file it electronically. So we don't have that system. So then you are fined. Particularly if you have a huge losses, you had it. You are not filed the return on time. So the technology is across all, and there is a utility tool for the digital signature, and we use the digital signature today for different platforms. You use it for MCA, you use it for GST, you use it for income tax, you use it for that utility is different for different purposes. Why can't you have one utility? After all, it's a digital signature utility. Why can't you have one utility for every platform? So we don't have it. So I understand that we are growing. There is so it takes time. But I think India has the problem biggest problem of bandwidth. It's a huge bandwidth problem. So they are unable to cope up with the speed of the policymakers. Policymakers want this to be done, but at the execution level, they have a huge problem, and they are not able to cope up. That's one problem. Secondly, the selection of the technology providers, selection of the way the briefing goes to them or whatever it is. So they have a huge problem in that particular. And somehow we are not. I think it's also in our DNA that we are not looking for a perfection in anything. I think everything we are looking at something which more functionally ready. I think that's the problem. So I would I would feel that technology is the biggest problem we have. So the other challenge we have is the current reporting system is not easy for smaller organizations. We have been talking about this for some time. And So, from practitioner's perspective, the recommendation I would have is that the way that reporting system should be organized better is that I think at the highest level in the government there should be some kind of a core committee which should clear the requirement for a particular report. Rather than every department independently asking for a reporting system, there should be some kind of a centralized planning should be done. And before you ask for a report, the planning has to go on very seriously in terms of templates, in terms of what information is required, in terms of what is the frequency, what is the periodicity, and things like that. Then please bring the user-friendly technology into it, because don't make it very complex. In any case, this reporting is impossible for the business owners to do it. They need experts to do it, and therefore it is anyways increasing the cost of compliance. Therefore, please bring the technology itself as much user-friendly as possible. And make a very comprehensive, there has to be a comprehensive guide to this use of how to do this reporting. There has to be a good guide, good help, good campaign, good training. There has to be a platform. So there can be video training can be available. Powerful video training tool can be available for every every department. How to fill this, what you should do, what you should not do, do's and don'ts and things like that. So that is something which is missing, which can help a big data. Then the data duplication and multiplicity should be avoided. I think we have the data as said that data is available in the central database anyway. So you try to create a database where these information are available and allow multiple agencies to share the data rather than every time demanding from the business owners for giving the data. Unless they want to see see whether is he making a mistake in giving a wrong data here and let's catch him. So we don't want to have that kind of situation. And I'm again echoing the views another speaker said that it has to be different for different size of the business, different sector of the business. You don't have the same reporting for a 1 crore business and 100 crore business. It's not fair. And you have a diluted reporting system for smaller organizations, and based on and of course that's why you need to do a planning, risk-based reporting. So you design the reporting system accordingly. So otherwise it's very unfair for particularly MSMEs and smaller and particularly startups. Today's biggest problems are the startups. And so it's very important for the size and sector-based reporting system. And also have some exceptions when the general reporting system, because there is something called, so with all the data, authorities can always look at the data, and wherever required, they can demand additional information. So there can be a general reporting system which can be simpler, and wherever you think the deviations seem to be happening, you can ask for exceptional reporting. So this is something which. For want of time, I'm not going into the specifics, but I thought the overview and outline should be helpful for the BCIC to take it up, and whatever is appropriate, they can take it up. Thank you.
Thank you, Mr. Vijay, and may I request now Dr. Om to do the honors for the speakers. Yeah.
Thanks, Ramprasad, and I would call upon Mr. Venkat. Mr. Simitapur, please. Dr. K, sir. Mr. T.K. Sridhar. I call upon Mr. Ravichandran to complete. Mr. Vijay Vishwanathan. Dr. Srikanth Pasrati. Thank you, sir. Very valuable input. Mr. Jagannathan Chakravarti, man of action. Mr. P.G. Subramanian.
I request the audience to break for tea for exactly 10 minutes before we reassemble.
5 to 6 minutes.
5 to 6 minutes. We shortened the break to 5 to 6 minutes, so the next session has to start. We are late by 10 minutes, so I request you to come back in 5 minutes. Yeah.
We are moving to the next session. Simplification of restructuring and exits. So we'll be dealing about this session. Basically, the focus will be on the restructuring and M&A areas, and we have experts on the panel. Mr. Pankaj Jain and Dr. K.S. Ravichandran will be moderating this session. On to you, Mr. K.S. Ravichandran.
This is a full-fledged EODB program, starting from business entity formation to exit. Every aspect of EODB is being considered as necessary so that the entire ecosystem is studied, analyzed, and we are able to generate some output for the purpose of consideration by the respective authorities. We have seen a long way in terms of restructuring, in terms of taxation. Provisions have, I will say, seen a big change. There have been, I find, good amount of work on this subject. And 2016 we have the Insolvency Bankruptcy Code, December. And now the economic experimentation that IBC has introduced has also seen good amount of experience now. So with this small backdrop, we can commence this session. I will introduce him. We have Sri Shreyas Jayasimha, my friend, a very renowned erudite professional, a lawyer, who has been in this field for several years. He has conducted complex trials and had several matters in High Court and Supreme Court of India, and has also conducted arbitration tribunals, domestic, international, and he is also a member of the Council for the MCIA, and he has good amount of experience in this field of restructuring, and therefore we thought it fit, we will bring before you Shreyas Jayasimha. Ramachandra Rao? I think we should have one chair. We'll add. Please come. I requested IBBI to. I requested Insolvency Bankruptcy Board of India to depute one of their senior officers, because each one of us would have our own experience and the perspectives developed out of it. Whereas a regulator, that too a robust regulator like IBBA, can see a overview, a bird's eye view of the whole ecosystem. And we have Sri Ramachandra Rao, General Manager IBBA, to share his thoughts. Welcome, sir. Thank you very much for sparing your valuable time and traveling all the way here. We have Ashwini Mehra. I had a discussion with him previously also. Former DMD of State Bank of India, was the Chief Development Officer and DMD of SBI 2014-2016, and he was just sharing his experience that after demonetization he thought it fit to move from Mumbai to Bengaluru.
Demonetization 1.
Yes. Maybe he would have brought 2000, I don't know. He's a great sir. I am Karur Vysya Bank Director, so you can give it to me. Accredited dispute resolution professional and insolvency professional also. He has rich experience coming from State Bank of India and having been the DMD of SBI. So we can see a lender's perspective coming from him, I guess. And we have Ashwini Sahu, my friend from ARCIL, Chief Investment Officer, brings 2 decades of experience in this infrastructure finance and international stressed assets and special situation funds. And prior to joining ARCIL, Ashwini Sahu was a Senior Vice President in the role of Investment Director with Edelweiss. Prior to that, he has worked, of course, in several organizations. And he comes here with a rich experience from the perspective of reconstruction. You know, ARCIL was a pioneer in the field ever since Sarfazi Act was introduced. And ARC's role in this restructuring and exit, as a practically experienced person, I know. And Ashwini Sahu is going to share his thoughts on that. Over to Pankaj for rest of the program.
Thank you, Mr. KSR. And before I start formally, firstly, big congratulations to you, Ravichandran sir. Big feat, 100 cases in IBC. You've represented various classes of stakeholders, no mean achievement. And given that the law itself has been very, very new, you've probably seen all facets of, be it a corporate debtor, erstwhile promoter, representing an operational creditor, to a financial creditor, to dealing with resolution professionals. So I think my congratulations on this momentous feat. So without much ado, I'll probably start with Mr. Ashwini Mehra. Sir, these timelines under IBC, so stated as mandatory / directory, and what we've practically seen in some of these large cases, including, you've been the resolution professional of possibly the largest EPC infra company in the country, Punj Lloyd. Would you say creditors are seeing light at the end of the tunnel, and are they seeing value in the way some of these cases have prolonged?
I'll just give you an example. Today happens to be 27th of May. 27th of May last year, I got the order for liquidation of one of the companies. It's an EPC company based in Gurgaon, for its liquidation as a going concern. The timelines which are stipulated for sale as a going concern is 90 days. And today it's 1 year and I'm still struggling to sell it as a going concern. So that talks about, whether the timelines are mandatory or directory. Essentially, I think it's a case-to-case issue. And as you would be aware, we started off with 180 days, maximum 270. We then took it to 330 days for a CIRP to be concluded. The ground reality is that on an average, it is taking about 384 days. That's the average it takes. And you have, almost 80% of the cases which are breaching the 330-day line also, which is the outermost limit which has been set. So there are reasons why this is happening. One is because it is the resolution process under IBC is primarily a legal process. The courts do take their time, and there is, jurisprudence is one of the areas which, is sort of delaying a lot of matters. The insolvency professional always is reminded about the deadlines, and there's inspection of what he's done and whether, he's fallen out of line by about 2 days or 3 days or whatever, and, it's highlighted as an irregularity. But then this is the ground reality, and the problem also happens is that in the Indian judicial system, as we've seen, that, the promoters have so far, been fighting back willy-nilly, whether, under any circumstances, approaching different courts to sort of prolong the issues. And I mean, pardon my saying so, but I think the lawyers are very happy with this situation. So, so I think, it is a system which, there is, there are elements where vested interests are there to sort of prolong the process, and the judicial system sort of, because of the inadequacy of the infrastructure as well as because of the need for being, absolutely fair and right in whatever is being done. Moreover, this is a new law. It's a commercial law with, has to be applied very imaginatively and, with a fair amount of flexibility. Consequently, all those issues are adding up to these delays. But there is, as Mr. Jain was asking, there is, light at the end of the tunnel, because ultimately this seems to be the only measure which is now, available as a judicial measure for, sort of settling the resolution of the, particular stressed asset, which is, one of the major issues which are, plaguing the banks. And this is where I think the matter rests, and it has to, only be helped with the improvement in the judicial infrastructure. Much faster judicial pronouncements would definitely help in trying to improve the situation. Thank you.
Next, Mr. Sahu. Given that only about 33% of the cases admitted under IBC have seen a successful resolution, and most of them have been referred to liquidation, and we constantly, debate whether ARCs in the country are capitalized enough. Do they have sufficient gunpowder to revive, take on these stressed assets and help in turning them around? And also lately, government has set up NARCL, one would think with the objective of helping more resolution of distressed debt. So your perspective on whether ARCs today are well capitalized enough, and is there what needs to be done for further participation in the system?
Yeah. See, the issue is not about capital. I think first is the banking system, as Mr. Mehra was saying. We have to acknowledge where the problem started. IBC is not the solution for everything. As a ARC or as a foreign private fund providers, see, if we recognize the problem and try to solve it before they get admitted in IBC, that is probably much better way even to manage the timeline of resolution. Because when the company is operating, there are multiple suitors for the companies. Moment company goes for liquidation, when it is shut down, then you don't find people who are coming to bid for that asset. That's what you see the company which goes for liquidation. generally will not find a easy or a value, discovery which is beneficial for the lenders. We have done that analysis to figure that out, that in liquidation cases, the percentage recovery is always the lowest, much lower. Basically, people are valuing the company as scrap and land. But when those same businesses are sold as a going concern basis, the recovery is much higher. In fact, in many cases, close to 80 to 90% of the dues. That's because people are trying to value that as a EV to EBITDA multiple rather than the realization value of the asset. See, there is no dearth of capital to come to India to solve these situations. There are a lot of foreign money because there is no other opportunities. Foreign capital look for the return and a timely resolution. So where the timely resolution part is not in the control, but the return is provided in this asset class. So we know we work with multiple foreign provider of funds. There are many people who come and meet us. They are willing to deploy more than $1 billion into, if I round them up together, probably they would be around $5 to $6 billion. They want to deploy in India in a year, but there is no opportunity to do those transactions. So what has happened if you track actually, they have taken the easy way out where they try to do the same transaction with the sellers. In a senior junior structure, they have deployed $1 billion of capital in many of these selling institutions and done exactly the same thing. But by doing that, we are not trying to find the solution for the companies itself. See, today, that is the biggest problem that we are facing, that each asset, if we are going to solve this, we need one, a financier. Second, the existing lenders have to acknowledge that the problem has happened in the asset. They should take the haircut and move on. See, today that acknowledgement, unless that happens, be it in IBC or in pre-IBC, the solution would be very difficult to find out. And NIRCL, coming to your last question, NIRCL was formed with a specific mandate. Government has given them the guarantee, also provided 85% guarantee. So that's a good way to start aggregating dates. See, the biggest problem today, as I was saying, all the lenders, they don't sell at one point of time. When I'm going to solve this, if there is a multiple lending situations, I cannot buy from all lenders at one go and then try to solve it. Hopefully in NIRCL coming in, the lenders would sell them at one go to NIRCL and NIRCL would find its solution. But let me remind you, as RCL, we were also set up. We are the first ARC when we were set up as part of SUBFACI. Exactly the same mandate what NIRCL is today trying to do. RCL was set up with that mandate in mind. And we, after doing this business for last more than 15 years, of course, we understand what challenges are faced. So I can only wish good luck for NIRCL that they would be successful.
Thank you, sir. Very enlightening. My question next for Mr. Ramchandra Rao. Sir, given that, the appointment of a resolution professional and the support team that he has seen some constant evolvement, starting from the early days to the formation of the IPE and then the support only being extended, by the team of the IPE. Both me and Mr. Mehra have known that there are a few of these very renowned global turnaround firms which are, which would be keen to participate in the Indian turnaround story. But given that the shareholding in an IPE is majority with individuals of Indian origin, etc., there are these challenges for them to set up shop. And also as a result, we don't see a lot of global participation for these assets. Any thoughts on this, sir, and the development of the regime going forward?
Thank you. Regarding this evolvement of this resolution profession, I would like to tell one thing. The company is in doldrums. The company is in difficulty. There is a principle that the person who is responsible for the company's collapse should not take over. With that principle,
we wanted a neutral person to take over the company, to sail the company through a good destination. A professional who is having knowledge in the field is much required, who knows about the Indian context, Indian mentality, Indian structure, Indian legal system, compliances part. So an Indian company, Indian IPE, Indian IPE entity, I mean to say, and its constituents would take forward the company in a much better manner than a foreign company establishing an IPE itself. That was the main objective. Second objective here is to be very precise, the insolvency professional will be given, will be mandated to undergo certain training. He is expected to go through the compulsory CPE, we say, continued professional education. So the continued professional education and the certification of practice, all these are associated with the fact that he is expected to acquaint with the system and also keep pace with the emerging jurisprudence in this field. Regarding the importance and evolution of the professional, and as Marasa was also telling, he is admitting also that this is a new law, economic law, which is in a nascent stage, required to develop. At the initial stage, how to take forward means the professionals, company secretaries, chartered accountants, lawyers who are very familiar with the process and running of a company can easily take forward the company in a better manner. Therefore, the experience, the number of years in a particular field, management, legal as well as accounting, is much preferred in the profession with the objective that the company which is sailing through rough waters should be properly taken to the shore. Whether it is in a sale of the company in a liquidation thing, that the name of the company should survive, or it is a resolution. So the resolution professional is a fulcrum of the entire ecosystem. Evolvement and better incentives is much required. And if you see, Marasa was also telling that if there is any complaints of delay in filing a particular form or anything by 2 days, it was those earlier days that the professionals should be disciplined. At that point of time when Honorable Supreme Court said the timelines are only directory, not mandatory. If it is so, things would go again into a helm of affairs, will go into collapse of the time, again it will become a civil court. Drawing out to the longer time, by the time the company's assets will go down. So it is with that reason that in the initial days that the board was taking a little caution view that if there is any delay on the part of the resolution professional, things were seen as a little serious issue, because there should be some other way to control the processes. Regarding the IPEs, IPE, it is a new concept. This was a very old concept, but it has taken a new turns in the recent past. That is probably, if I remember, it was the regulation made on 20th September 2022, wherein new thoughts have been brought in, and it is in experiment stage. It takes some more time for the IPEs to evolve. Regarding the foreign investment in this thing, I think it may not keep pace with the Indian system or Indian competitiveness. It will take some more time for the foreign players to come into this field. Although we see we require Indian present economic system require more robust system, but at the same time, if it is not sustainable, mere speed may not probably, more speed, more crash may happen. So the board at present is going for studying its steps very cautiously, and Ministry has also very recently given, probably if I am right, it is on 18th January 2023, they were floated discussion paper, how to take about the processes, which inter alia contains about the evaluation of the process for the resolution professionals as well. So at the board, I would say regarding the speed and regarding the changes that are to be brought in, I can say that in the, if I'm right, Kesar sir, we started regulation probably on 15th December 2016. If you just deduct those 15 days, in the last 6 years and all, we have made 101 regulations against 18 principles regulations. Last principle regulation was made on 4th April 2021 regarding the PPARP. So that's all regarding the statistical part, that is fine. The board is always continuously monitoring and try to help the ecosystem in a better, sustainable manner. I can tell you, I can cite you only one small incident where one liquidator has sold a property. I don't mention, probably professionals and ERC people might have got it, that a property was sold in a liquidation auction, public auction. It was sold for 48 crores and odd. Then the auction purchaser purchased it, and the liquidator has sent a letter to the, the local jurisdictional sub-registrar for registration. He said it requires payment of stamp duty. You will have to pay the stamp duty. Then why for I should pay the stamp duty? This is not a document, proper document of conveyance. It is not a conveyance deed, I did not pay. It is only auction certificate of immovable property through the auction. It is required to be filed only, simply filed, whether or not I should pay. So if you go through this particular part, what you see missing in class 12 of the schedule 1 of the IBBA liquidation proceedings, there is no obligation cast in writing upon the liquidator to send a letter. If you see Rule 21 of the ITCP, Income Tax Certificate Proceedings, I had been a recovery officer served in the DRT Bengaluru. I issued not less than 28, if I correctly remember, recovery certificates, out of which I have issued a certificate of sale. And in each of them, I have ensured that in terms of this regulation, in terms of this rule, Rule 21, the so-and-so, I am exempted from appearing, and this document is required to be filed, not to be registered. If a document has to be registered, it is required to be stamped and paid. And as in the morning, it was telling that it was 7.8%. Mr. Kakni, I don't remember his name, he is an IM professor. He was telling that for a corporate, one has to incur expenditure of 7.8% of the cost of the property which he would be purchasing. So, the stamp duty equivalent to 3%, if it is exempted from registration, will it not be better for the institution? Will it not be better for the ecosystem? So, in this manner, I have placed a note to my chairman that a duty may be cast on the liquidator to send a letter, simply. And we are not going for amendment of the Finance Act for taking away the stamp duty from the ecosystem. We can't do it. Minister of Corporate Affairs cannot do this. So simply, if you will obligate the liquidator to send a letter, maybe the auction purchaser may get a benefit, and the 3% can be negotiated for the asset of the CD. What I just would like to tell is that the regulator is continuously monitoring each and every development, because of which only 101 amendments were required to be brought into the system for betterment. And this is all possible only through a professional, insolvency professional, who is a fulcrum, who is the hero of the insolvency professional, who guides the entire process. Because IBBA with 43 staff officers of the board cannot take forward each and everything and involve themselves. Because the insolvency professionals are representing the core knowledge of the insolvency, not only insolvency, administration of the business, also the compliances of the company. Insolvency professionals' involvement is much needed to the entire ecosystem. To be honest, if IBC is successful, and Mr. Richard was telling that number game is not very important, I do agree, but at the same time, if the success of the insolvency code would not be there. Probably Indian ranking system from 2018 when it was 77 would not have brought down to 70 or 63, 14 numbers down just in a year, 2018 to 2019. Comparative position, if you will give in terms of the resolvency of the insolvency, resolving the insolvency index, we were earlier 108, now we are at 152, I believe we are at 52 as on 2019, because World Bank has not further reported on the ease of doing business. So to sum up the evolution of the resolution professional is a fulcrum. I believe many of the chartered accountants, many of the top practicing company secretaries, they are looking forward, looking at the insolvency profession, pursuing a profession. That way, I think board will do much more needed help to the insolvency professional regarding the delay and other things, issuing the charge sheets, that something more being involved, the board will definitely address. Board is continuously monitoring that, is getting the inputs also. I would be much delighted if we receive any other inputs. I request Mehra Sahab or Sahu Sahab, who are in the field, any difficulty if you are facing in terms of a regulation, making a regulation. IBB is the most robust regulator who will take forward each and every issue that is being flagged as a policy input. At an appropriate time, it would be considered.
Thank you for your comments, sir. I think quite informative and educative for us. Shreyas, coming to you now, a lot of us have been intrigued by the Go Air voluntary insolvency filing under Section 10. And again, it's thrown up the question of cross-border insolvency laws with a lot of foreign lessors appealing the insolvency admission itself. India has so far not yet joined the UNICTRIL cross-border insolvency framework. What are some of your thoughts around this, given that, you know, aviation and maritime are both very specialist industries where you have, you know, stakeholders from different geographies, you know, jurisdictions apply, and does IBC supersede some of these, or, you know, is it the other way around? So, yeah.
Thank you very much, and namaskara, BCIC. I feel like being back at home after a long time with BCIC friends. The two sectors that you point out are no doubt critical for supply chains. If you look around us in this room and what we are all wearing, clothes, devices, what we are holding in our hands, and ask ourselves how many countries goods have passed through to create this moment that we are all experiencing together, perhaps we would have crossed most countries in the world. So what we consider as being uniquely Bangalorean, uniquely Indian, uniquely here or there, parochially this or that, is no longer so. And to create this moment, the shipping and the maritime, aviation industries are absolutely critical. And we have seen the domino effect of slowing down of these key logistics industries, which can have a butterfly impact in multiple economies, multiple industrial sectors, not limited to one. Just like the banking sector. And so, for example, in India, recognizing the critical importance of the banking sector, the resolution of banks is kept out of the IBC. Of course, and we're all eagerly awaiting the legislation that will come for bank insolvencies before one actually becomes insolvent. Similarly, when it comes to aviation, the Go First case, it's not the first time we have seen insolvencies. We have seen almost 20 insolvencies in the aviation sector alone in India after privatization. And they say the quickest way for a billionaire to become a millionaire is by starting an airline. And these are ego businesses. Many people are tempted. Many billionaires are tempted, and they end up being millionaires. So this is a known problem. There was also a fantastic article about why is it that Indigo, Go First, and SpiceJet use the same engines, and only one of them is doing really well. And it all comes down to contracting. It all comes down to the efficiency with which you are repairing your engines. So, conscientious promoters in this industry, in the aviation industry, and conscientious lenders price in their risk in their contracts. What you are seeing in Go First is frankly unfortunate in my view, because India is signatory to the Cape Town Convention. The Cape Town Convention gives rights of lessors to repossess aircraft if it becomes necessary. In fact, it has happened. We've done it in Bangalore. Might have been involved, I was involved, other people might have been involved. Companies like GE CAS and others, when it came to Deccan Aviation, when it came to Kingfisher Airlines, we have repossessed aircraft in Chennai, in Bangalore, and other places. This was prior to the IBC regime. Prior to the IBC regime coming into force, there was great comfort that the international lessors had, because you had both dry and wet leases insofar as aviation leases were concerned. And most Indian airlines don't own their aircraft. Now very few have given very large orders. But otherwise, it's usually a lessors and lessee market. So the lessors are most concerned as to how they can repossess if there is a default. Unfortunately, the Cape Town Convention is to be backed into municipal law by legislation. That legislation was proposed in 2018 and it has remained as a bill. And we have not seen the Cape Town Act come into force. It has remained as a bill. And that is a lapse, I would say, when the aviation sector not impressing upon the rest of the government how critical the sector is. If we had had that act in place, then this conflict would not have occurred that we're seeing now. Unfortunately, now it is left to perhaps some creative interpretations of the obligations of India, which have been entered into in an international stage. And if India has not yet implemented in domestic law, those of us who are involved in investment treaty arbitration. I have defended India for 9 years in The Hague, in Paris, in Geneva. I know how critical all it takes is a small pin like this for an explosion to take place. And I can very well foresee some of these very large lenders saying India cannot take advantage of its own lapse. Having signed a convention, now don't hide behind the IBC to say that you will not allow international lenders their rights under law, which you have acceded to. So, unfortunately, without a coordinated approach, India may be exposing itself, in my view, to a very high risk of investment treaty claims by some of the lessors bodies if the Cape Town Conventions are not properly adhered to. Shipping, on the other hand, is a great example of how judicial interpretation can help. We've had a decision of the Bombay High Court that has said that admiralty has been a jurisdiction that has existed prior to the Constitution in many of the presidency courts. And in fact, those of us who, I think, have argued most of the ship arrest applications in the Karnataka High Court, and I always begin by saying, this was a preserve of the Bombay Bar or of the Chennai Bar or a few other bars. Admiralty Act of 2017, prior to that, M.V. Elizabeth's case gave the power to every high court attached to the coastline of India to arrest a vessel that came within its vicinity. Unfortunately, these high courts did not exercise that power. Now we have begun to do it. We don't allow the Bombay Bar to come very much here, if we can help it. So the shipping industry has shown us how insolvency can be recognized in the sense that the Bombay High Court has said, rightly in my view, that the shipping regime supersedes the insolvency regime. So if there is a shipping concern that faces insolvency, then the maritime liens that exist under admiralty law are not impacted by the IBC. Now all it took was a bold judicial decision to come to this. It may happen in the case of aviation as well, when it ultimately ends up in the Supreme Court. We don't know, but that is perhaps possible, especially when people realize the threat of international claims that could exist if this is not attended to. But like this, I could go on. There are a couple of other critical sectors like space, nuclear, and in time we will find that these specialized sectors can't be addressed by a generic law.
I would like to add a few things, Mr. Yas. So actually, you have rightly said that the Cape Town Convention is the main convention. Montreal, everything is gone, all old one. Cape Town will be the latest one, 2008 or 9, I remember. India is a signatory, no doubt. But if you will see the insolvency of law, the insolvency law doesn't give any sectorial exemptions. So far, so far. There was a meeting going on in the ministry also. Ministry of Aviation has recommended that there should be an exemption under Section 14, that is moratorium under the IBC. Initially, the view was given that sectoral exemptions for a particular industry cannot be given for the reason that it will affect many other industries like telecom, spectrum issues there, maritime issues there. IFSCA will at GIFT City will take care of that part. Anyway, that part is almost reached a finality. Notification may come any time. Regarding the Cape Town, it says that resolving an insolvency will take about 60 days time as per Cape Town. But our IBC law says it is 180 days time for the moratorium period. So this has to be addressed regarding the cross-border insolvency. The government is very keen on that to bring out the cross-border only to protect our own corporates as the first priority, and also to bring in a good ecosystem. Therefore, regarding the Goer, I don't believe the order is fine in the practical situation. Case-to-case basis, this is okay. Regarding the lease rights of a person, law is very clear that the person cannot hold the property of a lessor with him. That cannot be part of the liquidation estate. That law, that position of law is very clear with respect to the IBC. As far as the rights of the lessor, how he can repossess the claim over his own aircraft, and spare parts again handled by some other Pratt and Whitney, because of whom only Mr. Kingfisher Malaya had also got into trouble. Because while handling that case,
I was a lawyer for Pratt & Whitney.
Yes,
I've been trained in jet engineering by them.
Yes.
That was a nice story written by Mr. Vijay Mallya. Unfortunately, no foundation in truth.
Correct. He had paid most of the money than the double the money of the suit value. Probably the tribunal has recovered. Even when I had ordered for the remittance of the money from the enforcement directorate from Mumbai court, and that at that point of time I got repatriated and went. Subsequently, State Bank of India, I think, recovered more than 5,000 crores, maybe just in less than 9 months or so. They have recovered that 5,000 crores. So that way, in the aviation industry, losers are not much with reference to financial creditors so far. I think ecosystem will develop, should have to develop regarding onlines with the Cape Town convention. Ancestral, we have already adopted a model on the ancestral. It will take some more time. Maybe not much time, short time.
Thank you, sir. Thank you, Shreyas. I'm just getting conscious of the time, so maybe a couple of quick questions, and then we can open the floor for the audience Q&A. Mr. Ravichandran, we've seen some interesting development recently. You know, there was this NCLT filing where a resolution applicant wanted the operational debt to be assigned. And there is an interesting, view on the same. Going forward, would you see such, balance sheet structuring and, the resolution applicants, given that the number of appeals that we see in NCLAT and also in Supreme Court, would the RAs still maintain interest, in acquiring assets? One. And second, would we see more of, given that the law is already 6 years in force, do you see more creative, resolution plans coming up?
Yeah, absolutely. I think there is no doubt, and there cannot be any fetter on the resolution applicant to devise a structure that gives him maximization of what he is putting in. While IBC as an objective looks at maximization of assets, sitting on the SRA side or resolution applicant side, if the scheme could be structured in the most efficient manner, I personally feel there cannot be any fetters on what maximization he would want to achieve and how it should be. For example, there are two aspects I always say. There is no commercial wisdom. Number one, what the SRA would want, subject to compliance of the code and the, I can say the borders or contours of that. Similarly, the payout, the last thing, the other side of it. There is no commercial wisdom in that. And that should be fair and equitable is what the law requires to the extent of liquidation value and whatnot. Therefore, I think we are going to see an era in which, given the experience that we have, in large acquisitions, acquisition planning will always happen in IBC acquisitions also.
Thank you, sir. Mr. Mehra, pre-packs were introduced with a lot of optimism, fanfare, and, you know, both, I mean, all stakeholders believe that this would ensure faster recovery, timelines would be bet, and this was, you know, for MSMEs, a boon forward, at least for the ailing promoter to, you know, recapitalize his business and give himself a second chance. But in reality, we haven't seen, you know, a lot of pre-pack filings. I think only 2 or 3 cases come to my mind in the last couple of years. So is this only going to be on paper, or do you see some development going forward?
Well, I'll keep my answer very brief. The thought of the pre-pack insolvency was definitely very good. It took away the rigors of going through the entire legal process. Much faster resolution, much cheaper, less disruption of an existing business, and you know, essentially much more smoother, bringing about a more informal and a faster way of trying to revive a business, or to ensure that the assets, there is value maximization done at the earliest without much of rigor, which we have in the normal process. However, to my mind, again, and sorry if I'm sounding impudent, I think the sandbox experiment which started with the MSMEs was a little misplaced. I would have, the essential problem with the MSMEs is their, the financial standards which they have, their accounting, etc. These are all obviously not of the same standard as you would have of a larger company and even a listed company, and those rigors which a secretarial practice puts into the larger businesses are not really seen in the MSME sector. So having started that, the sort of confidence that people would have had in a pre-pack happening in the MSME sector was probably not there. And IBBI has possibly realized it, because they are now thinking of extending it to the non-MSME sector also. And consequently, I do see a lot of traction happening here. And my talk with the bankers also shows that, they are, sort of focused on this, because their experience with the longitude of the CIRP, etc., and the fact that most of the cases have been going into liquidation, they are now, willing to explore this as a much better and faster option. Thank you.
I'll just give a small information, sir, just a few lines. To share on this question, I would like to just, I was KRS, I was here, sir, I was just during lunchtime I was sharing. Very happy to state that that one case by name Amrit Spinners is the Chandigarh NCLT order that was come on 3rd May 2023. I can say that the timelines are that 90 days time for the process and 30 days time for the AA to give its decision. In this regard, that is 120 days is the timelines. I can surely say that this case was disposed in 154 days time, and the yield to the creditors was about 39.8%. So I can tell this is a successful experiment. Probably it needs more advocacy with the bankers and also with the MSME. It can take definitely a flying start, I believe.
Mr. Sahu, I mean, one last question. Personal guarantees invocation. Now, again, for the last couple of years, we've seen with a CIRP filing, personal guarantees are also being invoked, under the IBC framework. Is the law fairly well settled here, given that SR Steel's resolution, interestingly, had this challenge come up? Creditors wanted to, invoke the personal guarantee of the erstwhile promoters, and Supreme Court came out with this judgment saying that there was no debt left for it to be enforced upon. So, you've been again at a lot of these cases where this is a contentious point. Your views?
See, I think the SRA looks at it a little differently. See, when the successful SRA gives a plan, he doesn't want that, there should be any future roadblocks. See, the old promoters who has the personal guarantee probably given, so to align him, many of these SRAs are putting that the debt assignment as a route where they pay the money and take the assignment of the debt in IBC as well. So with that, the securities of personal guarantee comes along with that. So primarily they do this so that they get the old promoters on the hook. So, but that is actually, if you look at it, the RBI doesn't allow corporate to own Indian rupee debt. There is a huge difference there. They are very clear that Indian corporates should not have a rupee debt because of exactly the same reason where they will go after each other. So today there is no clarity what should be the best way to do this, because many a times we find that even a SRA gives the plan, it doesn't get implemented because of one reason or the other. Maybe the frivolous, cases put by the older promoters, which delays this, resolution to probably 3-4 years. We have seen, plan approved by COC but still not approved by NCLT because multiple cases are going on. So I don't have a clear-cut answer. I think two regulators have to, IBBA and RBI have to sit together to find what is the best possible way. If they allow corporates to have access to Indian rupee debt, then along with that the security would come. So that's what my view. Probably it would help in the resolution of the assets.
Thank you, gentlemen, for the very informative and quality time. I think all of us, in the morning were very buoyant about, these various simplifications that have enabled us to start a business, get a business on the ground, get it running, etc. And I think in the panel, all of us would also agree that from the BIFR days, where we saw various stakeholders embroiled with, no end in sight, at least IBC is the way forward, even though the timelines have been longer, the sort of decisions, are challenged, and there are multiple appeals. But still, I think we are seeing that this is at least a way forward. And, India having adopted or, come out with the IBC framework is also provided an insolvency mechanism, which is at par with the, a very developed European and American jurisdictions. So with that, I think I'll probably ask if there's a couple of questions from the audience and, we conclude. Yes, sir.
This is a question to the panel. As a person who's worked in the industry, I look at two cases. One where Satyam Computers is a classic case which, forget about whether it's a fraud case or whatever, it was a classic going down the drain company which was quickly put on a pedestal and the business was revived. And it's really doing well today. And there are plethora of cases which are lying with IBBC with, where liquidation has been the norm. The financial creditors don't get anything in the bargain because the operational, financial creditors get something, operational creditors hardly get anything in the bargain. Now, can we look at know, and Satyam was done maybe before the IBC came in. Is it because it went on to an even pedestal because it preceded IBC? Or what was the reason, or there must be some learning value which really led to the success of Satyam Computers case versus the rest?
Primarily, Satyam case probably cannot be compared to today's IBC cases. Primarily, Satyam didn't have any dates, sir. They were, they were generating huge amount of cash, and the fraud, whatever supposed to be, is that because they had that FD which was not there. So they didn't have, actually, if you compare Satyam today, Satyam probably would not come to even IBC because there is no lender to Satyam. So, second, the pre-IBC, if you see outside IBC framework, I think one large resolution which has happened today is, S Bank, for example. With the IBC framework, government with all the regulators, all the banking system, they could solve such a large institution in a very time-bound manner, very, very really fast. And lot of, there is liability who are protected, the depositors are protected. That is actually a framework where you have such a large company which is going on, it is a going concern basis. We found a solution to that. So IBC, I would not say it is a, probably panacea of, solution to everything.
The intervention by the government of India in a revelation case like Satyam is totally different from balance sheets being blank in respect of thousands and thousands of corporate debtors. So the idea was to discover a methodology by which a default will indicate the existence of insolvency, though ultimately insolvency may not be there. Default may be there pursuant to several other reasons. So Satyam intervention cannot be, in my opinion, an indicator that under IBC we can come out with such type of things. Because that was because of this thing. But one thing we need to be, as a summing up, I will say from my side is, balance sheets are blank. Question is about governance and integrity. For example, if you take Jet Airways case which I have appeared for the workman, 11,000, 12,000 crore of balance sheet, particularly value of debt. 450 crore is the value of the resolution plan. With a clause for sale of the assets and pocketing the money. So therefore, we are in a different situation now. It is emerging. Maybe the integrity of the balance sheet will be the subject matter which will play its role. Business losses alone must be the cause, because you are not able to see. I don't think we have seen any great flow of funds pursuant to personal guarantees enforcement. I don't think there has been any great flow of funds pursuant to avoidance transactions. Therefore, all that comes to the kitty of the creditors is only the balance sheet assets. And the government has protected operational creditors by saying up to the liquidation value, you will be entitled to claim. And therefore, if you are not having this IBC intervention in respect of particular CD, as an OC you would have got only that which is possible in a liquidation, or unless it is continued. Therefore, that is, I think, in a way, this is the best that could have come about. Thank you.
So I think with this, excuse me, sir, I have a question this side. So good evening, panel members. I have a very, very basic question to Mr. Mehra, and in fact, even sir told about, the governance and integrity part. I just want to understand, like, whenever a credit offtake is happening in a bank to any commercial client, and we see that the credit exposures are very high, and why are we entering into such situation where they are, defaulting, and it enters into a, situation of liquidity risk, insolvency? Why are we not, putting a check on that? Having said that, sir, we know that our, Indian banking system is very robust, and we have seen that, whenever a client is coming into the bank, we have different, document checks, we have different, guarantees and all. And we also know what are their 3 years plan, 5 years plan. Still this situation arrives. So just for for the sake of ease of doing business, don't you think this is a very, red flag, indicating the audit check should be there?
So actually, as far as banks are concerned, they have, exposure limits, sectoral as well as, for individual. And these are very, very strictly adhered to. They are actually board governed. And even the Reserve Bank of India has, an oversight on that. It's very strictly implemented. The reasons for the accounts going bad is obviously when the offtake happens and, before the offtake, the due diligence which leads to the sanction happens, there is a certain optimism which has been built into that business, which has been, sort of detailed, and you'll generally find the appraisal notes which the banks prepare to be fairly detailed and, well argued out before the board actually approves those loans. What happens is that some of the assumptions which, have gone into the business model, they go, they are not, realized in either for external factors or partly, very often as, we are seeing these talking about personal guarantees being enforced and avoidance transactions for suspicious transactions happening in the balance sheets and all that for internal, corporate governance reasons. So corporate governance is one of the, major defaulters as far as Satyam is concerned. Fortunately for the banks, there was no debt there. So they didn't lose anything. But, these are the factors which go into the making of these bad loans. And it is essentially, a misplaced confidence on the assumptions holding out. And there is a fair amount of, the limits are renewed every year, and there is a process by which the monitoring of the accounts also happens. So the accounts going into IBC are those which are ultimately felt that, there is apparently no resolution which can happen through a non-legal process. It has to go through the, it has to be, you recognize the default, take it through the CIRP and do a resolution. Of course, now on the resolution, recovery is what banks are mostly focusing on. There is also, talk about trying to focus on not the recovery, but the revival of the business so that those assets can continue to be productively used.
Thank you, sir. With that, we'll bring an end to the session. Appreciate the time of our participants.
Thank you. Thank you.
Thanks, Dr. K.S. Ravichandran and Pankaj Jain. I would call upon Shri Ramachandra Rao. Can I have Mr. A. Murli? Mr. Ashwini Sahu. Can I have Mr. Venkatakrishnan? Mr. Ashwini Mehra. May I call Dr. Srikanth? Mr. Shreyas Jayasuma, Mr. Ramprasad, slow. Mr. Pankaj Jain. Venkat.
Along with Pankaj.
Commercial dispute areas. So I would request Mr. B.C. Thiruvengadam, Senior Advocate and International Arbitrator, to come on the dais. Mr. Karan Joseph. What come? Partner Schedule Amardas Mangaldas. Mrs. Irfana Nazir, Advocate. Dr. Shrikant Pasadi. Sit down. So this will be a panel discussion. We'll be talking about various aspects of mediation, arbitration, and how it is relevant to ease of doing business. So we have the experts here. From morning I was hearing only judiciary is setback. People are accusing judge system, everything. But these gentlemen are here to prove them wrong. Ladies and gentlemen, sorry. So I would introduce Mr. Trivengadam. He is a commerce graduate and holder of law degree. He is a patent agent and of Government of India, certified US patent process prosecutor from Psi 3 Center, Sunnyvale, California, a certified mediator by ISDL San Francisco and the High Court of Karnataka. He is acclaimed as a specialist in commercial and corporate law. He has expertise in banking, insolvency, almost all, and he is A Group Counsel for Government of India before Supreme Court of India. He is an internationally acclaimed arbitrator and mediator and has resolved several cross-border disputes. He is the co-founder of the famous Bangalore International Mediation, Arbitration and Conciliation Center, known as BIMAC. He has rendered lectures and technical papers in various universities and fora in India and abroad. He is the president of Corporate and Administrative Law Founder, Coral, founder secretary of the Quiz Foundation of India. He is an active member of International Council of Jurists, London, International Bar Association, London, Inter-Pacific Bar Association, Tokyo, INSOL International, New York, and Union of International Advocates, Paris. Apart from that, he has got various recognitions like Nexus 100 Legal Luminaries of India 2016, then 100 A List Lawyers of India, Leading Lawyer Award, Legal 500, Making Minds Meet, Conflict of Conscience is his book recently released. He was conferred Cambridge International Professional Award in 2010. In April 2017, David A. Clark School of Law, University of District of Columbia, honored him for contributing to the worldwide legal community. That's Mr. Trivengadam. He's a designate advocate, senior advocate. Dr. Shrikant Pasadi, he's a chartered accountant, second rank, and Chartered Institute of Management Accountants, London. He's given me a whole paragraph of his qualification, with your permission. So he sits in 34 international panels of arbitration. He is an international arbitrator and very proud member of BCIC, and you have seen him from the morning. Karan Joseph is a partner at Schedule Amarchand Mangaldas and Company. His practice areas are in litigation and arbitration, domestic and international. He is an alumnus of Columbia Law School, New York. He is adjunct faculty at the National School of Journalism and Public Policy, where he teaches a postgraduate course on media law. He is the managing trustee of the General K.S. Timmayya Memorial Trust, which runs one of India's longest running annual lecture series in honor of General Timmayya. And the lady here, she is Irfana Nazir. She is a law graduate from Bangalore University and has diploma in cyber law and intellectual property laws from the Indian Institute of Law, Bangalore. Previously assimilated immense experience at Sundar Swami and Ramdas Associates, Cyril Amarchand Mangaldas, and in the chambers of senior advocate late Shri D.N. Nanjunda Reddy. Firmly believing in empowering the youth, Irfana has dealt with matters which include corporate law, real estate, property law, representing clients in various forums from trial courts across Karnataka, High Court and it's Karnataka, Mumbai, Telangana, Supreme Court as well. Handling matters ranging from revenue, contractual dispute, family disputes, criminal disputes, etc. She has been involved in advising companies, government organization, PSUs, banking and financial institution for various matters related to corporate and white collar crimes. She is a daughter of Justice Abdul Nazir. So welcome all. So we will start the panel discussion and I will be the moderator. I don't know how I'm going to take this forward with these stalwarts. Since morning we have been discussing that there are a lot of cases pending across various courts and many speakers were spilling out number of years taken for resolving the case and disposal of the case. This question is to Mr. Thiruvengadam. Sir, what does the government or the judicial system do about this? How is it going to reduce the pending cases?
Well, these are very common questions posed to a lawyer in a non-legal fora. Let me start defending my profession, defending my courts, and defending the process. What is the population of India? We call it 1.2 billion. Assuming 30% of the population are below the age of 18 years. So, let us have about 90 million people in this country. As against a 90 million, with respect to 90 million population, the statistics released by the Supreme Court as on yesterday, there were about 4 crore 33 lakhs cases pending. 4 crore 33 lakhs cases pending. Out of which about 3 crores and odd are criminal cases. Okay? So let us leave out the criminal cases for a minute. About 1 crore and odd compared to a population which we are talking about 90 million cases is nothing. The question is not that there is a docket explosion. There is a docket exclusion. How many of you go to the courts? If you have to recover 10,000 rupees, will you file a case? No. Because for you 10,000 is not a big amount. You don't want to waste your money. Good money chasing bad. Okay. Assuming there's an auto rickshaw driver and he has to recover 10,000 rupees. Is it a big money for him? Yes. What will he do? Can he go to the courts? He cannot afford. Many times they say, no, I don't want to spend money. So there's a situation where India faces a serious crisis of docket exclusion and not docket explosion. Ease of doing business. That's a topic. With a limited practice, and having visited a few countries extensively and had the experience of handling some litigations in the Western countries. My friend will also agree with me No courts in the world, especially in the Western world, will have on board 200 cases a day. A judge handles, in Bangalore I can tell very clearly, first round of process is about 50 cases. 50 cases posted for evidence. 50 cases posted for almost for hearing on interlocutory application and 50 cases for final hearing. And despite that, the judge churns out, hears patiently, at the end of the day may go mad, he get BP, what? I pity them. And ultimately it does deliver the number of cases compared to at an average of 3 cases a day in the US, which I know very well. So, ease of doing business, I don't expect the government to do anything for us. It is what we and you in the business community need to help yourselves. How do you do it? The ADR mechanism, though it says alternate, it should be alternative because alternate is we can't substitute the legal system in this country. So it has to be an alternative. Okay, you exist, I'll also exist. And how do you go about? Now the question that you ask is, okay, how do these auto rickshaw drivers and all resolve the dispute? They have an alternative mechanism. They do resolve it, but in their own way. A survey that we conducted in 2007 revealed that 9%, only 9% of the disputants comes to lawyer and they go to courts. Slightly more than 9%. Do you know which is the preferred mode of recovery or resolving dispute? Going to mafia, underworld, don, including big companies and credit card companies to recover, take the help of the underworld in a different garb called, with due apologies, they call themselves debt recovery agents. Okay, this is a reality, let us face it. When I say this, my friends, your lawyer friends may be very offended. People with the preferred mode is the mafia, not the lawyers. Okay, so that being the case, what is that we have? Our traditions have given us a lot of alternative options. We had panchayats. We have various other systems of guilds, community resolution. There's a process called conciliation, which is part of the Arbitration Conciliation Act, 1996. We don't realize, many a times this conciliation is done by many people. You go to a police station, the policeman does a conciliation. You go to a politician, he does a conciliation. You go to a Matadipati, he does a conciliation. But it doesn't use it, we don't fit it properly within the ambit of the Arbitration Conciliation Act. If you do it, we can resolve it. My concern is if the government is able to regulate, come with a code, a dispute resolution code, recognizing these these unconventional dispute mechanism, half the disputes can be resolved, which is not happening. Of course, the new mantra you're talking about is mediation. I'm a very passionate mediator. I would always propagate support mediation, but mediation is not the solution, my dear friend. It's just a minuscule portion. I'll talk about that also, if time permits. See, we have what is called Legal Services Authority Act. That is Lok Adalat. Very popular ADR mechanism is the Lok Adalat. There are two types of Lok Adalats. National Lok Adalats and permanent Lok Adalats. I'll have a small statistics which I'll read it out. For 2021, the permanent Lok Adalat, I'll tell you what permanent Lok Adalat. Permanent Lok Adalats have been created. It's a hybrid mechanism of conciliation as well as adjudication. Companies like insurance companies or banks or electricity supply companies, telecom companies, they have to recover the arrears from any customers. They initiate the process under the permanent Lok Adalat system, where a notice is sent by the permanent Lok Adalat. It comprises of members who are normally retired judges and people from the legal community or social workers who sit there. they send notices, and then they try to adjudicate and they try to bring about a compromise. If the matter gets settled, well and good. If it doesn't get settled, the permanent Lok Adalat takes the shape of an adjudication process, and they adjudicate. For 2021, there are huge statistics, but just for 2021, it's as available in the website of National Legal Service Authority. There were about 3 crore 26 lakh cases referred, and 1,27,000 cases were resolved, about almost 1/3. Through and permanent Lok Adalat as such, about 1,03,000 cases were referred, and 97,000 cases were settled, almost close to 90%. So many of these public utility services companies are availing it, which you may not be aware of. So when it goes to mass recovery, they prefer this route. So it's a very, very popular route, and that's one of the way they recover. And we have this Commercial Court Act which has come in. And unfortunately, people have not taken into consideration. There are about 32,591 cases filed in 2021. And people who opted for mediation was 1,059 cases and settled for 578. Government is doing its best.
What happened to the mediation bill which was proposed?
The problem with mediation bill are too many. I'm sure Dr. Omprakash is aware, where we participated in the Joint Parliamentary Committee meeting in BCIC represented. We found too many flaws in the bill. It was done, I don't know why it was done. It was done in such a hasty manner without understanding the reality of a dispute, of any litigation or dispute resolution. It has done something, I don't want to say anything more. We pointed out more than 53 defects in the bill. And the parliamentary committee accepted more than 35 defects which we pointed out. And there's one of the reasons perhaps the bill has not been tabled, though it was supposed to be passed in the last budget session, that is 2022 budget session, has been delayed. Because we have been urging to have an ADR code and not a standalone law for mediation alone. Every time we see the Arbitration Act is being amended, 2015 amendment, 2019 amendment, I don't know how many more amendments. And so we have to have a comprehensive interlinking, a law which takes care of everything as such, and also recognize in the process those mechanisms which coexist. One of the flaws in the bill as such is that they are substituting conciliation with mediation. Conciliation is totally a different process. Mediation is different. Mediation is a skilled and trained mechanism where I don't, as a mediator, I don't even give suggestions. I can't evaluate who's good, who's bad, what is right, what is wrong. In a conciliation, there's a lot of liberty given. Why? And conciliation is fairly a successful model which has not been recorded. Many matters, many disputes are getting resolved through conciliation, which is unfortunately not recorded. So why eliminate a very successful mode of dispute resolution, that is conciliation, and say, come on, it should be substituted by mediation? That is a major flaw, and that is going to it's going to worsen the situation as such. One of the reasons is the trading and business communities should adopt mediation as well as conciliation and an option to resolve disputes. For example, we have set up BCIC, Biomac Mediation Center. It's extremely helpful. Every trade center, every trade body, I think they should adopt these sort of dispute resolution mechanism, including when if arbitration is possible.
Thank you. This
It's been a long comment.
Yeah. This question is to Mr. Karan. This is in perspective of MSME. So MSME cannot afford legal fees, and they cannot wait for the justice to go on long time. There is a facilitation center. It's called Samvidhan. So do you think they are doing a good job? How is it? Will it be an alternate dispute resolution for them? Or again, they go there, they don't succeed, again go to the legal. How do you see? This is basically from the perspective of ease of doing business.
First of all, thank you, Dr. Omprakash, and thank you to BCIC for having me here. In terms of what the MSME does, like you said, the MSME Act, which was in 2008, was brought in to essentially make life easier for smaller industries, smaller businesses. Some of the incredible things about the Act, the features of the Act, is that you have to make payment within an outer limit of 45 days. And if you don't make payment within that agreed upon limit, which could be shorter than 45 days, but an outer limit of 45 days, you have to pay interest on that amount, which could be up to 3 times the prevailing bank rate of interest compounded monthly. Now, obviously you can understand, of course, ease of doing business is for the MSME there, but for the other party, there's no ease. But if an amount is unpaid, what an MSME can do is go to the Facilitation Council established under the Act. And the council will council interestingly wears 2 hats. The first thing the council will do is try and see if some sort of conciliation can be done, which is essentially a settlement, without going into per se the merits of the case. If that fails, the council will then decide to arbitrate the matter, or of course either by themselves or refer it to a separate institution that carries out or provides these services. Quite often we see, especially at the Karnataka Arbitration Center, that the MSME councils keep referring their matters because it's preferable. I think it's preferable for them, and I think it's also lawyers pushing for it to be pushed to the center. So it does work. The advantages of doing it through the council itself, let us assume that conciliation doesn't work. The advantages are that it's cheaper, that it's quicker, your fees are minimal. Quite often you don't need lawyers either, because essentially this is purely, I have supplied goods, I've supplied services, these are my invoices, I need to be paid. So there's really not much evidence. Of course there are exceptions, but there's no trial per se. So that's why it's quicker. Quite often if there is a dispute, the council may not entertain it if the dispute was established prior to the reference being made. You know, what's interesting is that for a long time there was a very unclear position in law as to what happens to an arbitration clause between parties if one of them happens to be registered under the MSME. So we had different high courts taking different, laying down different rules, which said that if the Arbitration Act will prevail. Sometimes one high court said that if arbitration was commenced under the Act before reference was entered into, then the Act will prevail. But fortunately, I think in about November of last year, the Supreme Court finally settled it and said that, look, the MSME Act is a special act. I mean, of course, the Arbitration Act is also a special act, but I guess the MSME is a specialer act. So the MSME Act will prevail over the Arbitration Act. It doesn't matter when it has been commenced, arbitration is commenced. It doesn't matter that the same, council that is engaging in conciliation activities is now wearing the hat of an arbitral tribunal, because that is what the scheme of the Act provides. So I think now there is a lot of clarity on why the MSME Act the procedure under the MSME Act prevails over the Arbitration Act. What's crucial, however, is, like I said, I hinted at it in the beginning, about how it's ease of doing business one way, not for the other person. So I've had some cases where our parties didn't know that the other side was an MSME for a variety of reasons. So quite often, as is wont in business, disputes arise, payments are not made, and we were shocked to receive summons from the council And we didn't know that they were an MSME. So then when we checked, it turned out in one case that at the time the contract was entered into, they were not an MSME. They became an MSME thereafter, right? But of course, we went to the High Court here and we got a stay. But similarly, in the same judgment in November 2022, the Supreme Court also clarified that you have to be registered under the MSME at the time you enter into that contract. It's
Actually,
not prospective.
the big companies normally while they're entering into contracts
We'll now ask for a declaration.
Payment terms, 180 days or 3 months. Some companies even avoid. Are you MSME? We don't want you as a service provider.
In fact, that's one of the, we've advised our clients to actually ask those questions and make sure that there is a declaration saying that they're not registered under the MSME.
And I think MCA has also brought in a form where they have to file a form.
Correct.
And if there is a due pending with MSME service provider, they have to file and disclose it.
Correct.
This question is to Irfana. Normally in a contract, you have a class, ADR class or mediation. But normally MSMEs and small companies, they just sign up an agreement, they want the business to be done. So when there is a dispute, you then find out that there's no ADR class. How do you go about, How can you bring an alternate dispute resolution?
One thing that we're forgetting is that every single business opportunity is a creature of contract, and the contract can be entered into at any point of time. It doesn't have to be at the start of commence of your business. You run into a dispute, you can still enter into a contract. So fortunately or unfortunately, an email link between, an email conversation can be taken into considering as an agreement to go to arbitration. It's sufficient. At the end of the day, it comes down to just a conversation between the two parties. If there exists such a conversation, we go in for arbitration.
No, what happens is one party doesn't agree. That's where the problem comes. And he wants to say, I will go to the court only.
So again, it is only on agreement that an arbitration can be commenced. If not, we have alternative solutions. Now, fortunately for business entities, there's something called the Commercial Courts Act, which has time-bound judicial decisions to be given out on the contract basic. But in terms of arbitration or mediation, it is only on the basis of consensus. It cannot be done without there being an agreement, formal or informal, between the two parties.
Shrikant, what is the legal sanctity of an arbitral award?
The legal sanctity of an award is protected by the Arbitration and Conciliation Act itself. The only caveat is that there should have been an application of mind while drafting an award. A reasonable person with reasonable circumstances should have drafted the award in a reasonable, which should not be a reasonable award, but a reasonable person with reasonable bent of mind should have bent of legal mind, let me caveat that, should have drafted the award. Award, if you go by the Arbitration Act, award has been given a definition that award includes interim award. There's no definition for award. That is where the form and manner of the award becomes an issue. There are many arbitral tribunals which render one-liner awards which are perhaps not conversant with how to write an award. That is issue number one. So when you talk about the legal sanctity, the courts will only apply a peripheral test as to whether the award has been made in a proper form and with due respect to the forms which are given in terms of the challenge to an award, which is 34. And you've got a interesting question of public policy. If the award is in contrary to the public policy of India, that was a far-running question in the legal history or the arbitral history. All your 34, 36 went into those kind of issues, which is where the Vijay case laid down the contours and said that, look, we cannot go and test the public policy realm of every award. We would touch only peripherally. And we'll see whether the award, there are many things that Vijay case actually highlighted. So that being said, legal sanctity is protected by the Act. It's protected by the very foundation, and I think it's interpreted time and again by the courts that award should have a proper, and there's a CRB guideline too in terms of what should an award have, what should an award contain, most importantly should contain for, there may be innocuous reasons as to how an award can be flawed. There'll be no date, there'll be no signature. So there are many things. I mean, I think people in the arbitral world, we talk about how judges are in this particular scene. The fact that judges have been doing for 30, 35 years the same drafting of orders and drafting of judgments brings in a certain level of sanctity. I'm just playing the devil's advocate. Brings a level of sanctity in terms of the process as to how the award is basically written.
In terms of this cross-border arbitration, say for example, a service provider is in India and you have a customer in US, they fix the venue of arbitration in London or Singapore. So the clients then start the arbitration, it's very expensive. How long do you think it will get closed, and how a person can enforce that kind of an order which has been passed?
The seat versus venue debate has been going on for quite some time. Justice Nariman was in favor of the Shashua principle, which brought in, like Irfana very rightly said, which is the intent of the parties. What did the parties intend in terms of?
They don't intend. It's drafted. Advocates have done that.
No, I think the pathological
And they have
clauses are
signed
largely missing these days. I mean, I'm sure Karan and Irfana as well as Sir will also agree. The pathological clauses are largely on the decline. We're not seeing those pathological clauses as much as we used to, perhaps 5 years, 6 years back. So I believe cross-border venue is different, seat is different. Insofar as seat, where a conscious choice is made between the parties to choose a foreign seat, which is what we saw in PSL Win Solutions, which has affirmed the fact that if a conscious intent has been, or conscious effort has been made to choose a foreign seat, the party autonomy has to be respected. Which is going back to Irfana's point.
Mr. Thiru, you want to add something here?
As Dr. Srikanth rightly said, about 5-6 years ago, or even maybe 10 years ago, the concept of arbitration, the parties were really, I'm not talking about big corporates. The small and medium-sized enterprises had no idea at all of what arbitration is all about. But rightly or wrongly, it became a fashion to have an arbitration clause without realizing the consequences. Worse was in a cross-border transaction. I know very well, about 10, 15 years ago, okay, there are a lot of transactions which happen, cross-border transaction, small companies, small export organizations, and they found to recover $1 million, they have to spend more than $2 million, $3 million on arbitration
Exactly.
fees. So they don't, in the sense that they're not in a position to negotiate with a foreign counterpart as to have a common venue, or a venue is different, seat is different. They were not able to understand. Maybe they're properly not guided. So these sort of things have been getting resolved because people are becoming aware. And that apart, there is definitely a change in the attitude of young lawyers who are more, I respect them a lot because they are more smarter than us, very, very intelligent, and they know their ground realities, and they're able to advise the clients in a very clear manner. Unfortunately, it was not the same, with due respect to my contemporary the lawyers. But we had to face the music. That is the reason people are scared. Why there is a resistance for enforcement of an arbitral award, cross-border arbitral award? There are a lot of reasons. I can spend one full day debating on that. I think we'll be running out of time on this. Yeah.
Irfana, this is a question to you. In agreements, you find sole arbitrator. Parties don't agree. Then they have to go to High Court, get an appointment. So that takes, even before even arbitration start, the appointment of arbitrator itself is a question. So how do you think, we should resolve this? Is there a fast track mechanism? See, these, again, agreements, as Mr. Thiru said, people are interested in getting business and they sign the papers. Dekha jayega baad mein. But then when it comes, you really find it difficult. How do you address this? Especially keeping ease of doing business and MSME.
First thing is that I completely disagree with the question that it is not tedious to get an arbitrator appointed before the High Court. I think all of us would agree to that. The appointment of the arbitrator is not the difficulty. It is not as tedious as people imagine it is. We may not agree to it on a maximum of 1 or 2 dates, but that's about it. You get an arbitrator, that is the shortest and the fastest litigation that you will find in any court across the country. That being said, it comes back again to consensus. At the time of drafting or entering into an agreement, businesses think it's okay, we'll do it on our own. This legal terminology, the difference between usage of the word venue and seat, or why exactly an arbitration clause or an ADR clause has to be termed in a particular manner. Nobody wants to invest in a lawyer. So nobody wants to invest in a lawyer at the beginning, so they end up investing in a lawyer subsequently. You need a lawyer. Anybody in litigation will tell you if the agreement itself had been done with a little bit of application of mind, you don't need 100 pages. You need 10 clauses that make sense. Everybody focuses on the commercials, but when it comes to arbitration or it comes to dispute resolution or even sending notices or some minor management that is required that can be taken care of between parties by simply talking to a third party. It is, you lost a ship because you wanted to save a nail. And that is all that is happening today. That is the fear psychosis that is being created by us trying to save a penny and losing a pound. And it's not that difficult. At the end of the day, again, arbitrators being appointed in the High Court or in the Supreme Court is not as tedious, worrisome, or difficult as we imagine it to be.
Thank you.
Just to add something, compliment what Irfana said. Absolutely, I agree with her. One step forward, one of the best way to having the ease of doing business is spend a little bit of time with your lawyer to draft the entire contract. Enforceability of the contract you will regarding breach. People do not know. There are terms and conditions they don't care to look into because as Dr. Om said, we like to push, we need to get this order, we need to get this. But there's a difference between Americans as well as Japanese. I've dealt with both these clients. Americans do not do a transaction without a lawyer. The Japanese are different. They'll say, no lawyer from my side, no lawyer from your side. We'll do it directly. Because they come, you don't know, there'll be a lawyer within them. Okay.
Thiru, this is a question for you again.
Karan, do you have anything to add in terms of the discussion that we're having?
Construction of contracts.
No, I mean, in my experience, I think most people in this room, let's be honest, go to lawyers, right? I think, are there exceptions? I'm sure there are, but as a rule, most people do go to their lawyers. Perhaps a little more time could be spent, sure. But to answer your question in terms of ease of doing business, enforceability, I think it's excellent. Our new arbitration, I mean the old act, but post-amendment, now actually says you have to do it within 12 months, extendable by 6 months by party consent, and then you have to go to court. That is unheard of. It is outstanding, right? People abroad are amazed by it. Courts are reluctant to now interfere with awards. That is the trend now. Courts are insisting on deposits for stay. There's no automatic stay anymore, and you have to make a deposit. So enforceability is key. Courts have carved out an exception for international commercial arbitration. Even if the seat is in India, if one party is a foreign party, it's considered to be an international commercial arbitration. Enforcement is almost under the New York Convention. Those parameters are set into play, right? In fact, all of these awards, as wrong as it sounds, suffer from a pro-enforcement bias. Right? So I think ease of doing business, I think we're doing well. Have we, is there room for improvement? There's always room for improvement, but I think we've come a long way, right? So and in terms of making things better, the government's come out with amendments to the Arbitration Act which haven't been notified yet for institutional appointments of arbitrator. So once those sections are notified and parties sitting, perhaps now is when you have to sit with your lawyers and focus on drafting your arbitration clauses to be institutional arbitration clauses, right? Where the appointment, you do away with appointment. You don't go to court for appointment at all, right? You go to the institution, CAC does it, MCIA does it, and maybe that'll be quicker. But that being said, I agree, now courts are very quick in terms of appointment of arbitrator. Literally all you have to show is that there is an arbitration clause. Everything else, the arbitrator will look at if he or she is going to determine competence. Of course, now the latest judgment says that an agreement has to be stamped, so that's a little bit of a hiccup, but it is what it is.
Mr. Thiru, your part...
25th April, your 5-member judgment is there.
That's the one I'm talking about.
one he's
That's what I
talking
refer
about.
to, where now an agreement has to be stamped. If it's unstamped, the arbitration clause does not. Now you may have to. Now you may have to.
Yes. Sir, just to add on to this very interesting discussion, I would have to defer towards the fact that the GCs, or the general counsels, they have a tendency to copy and paste. And the templates are killing the contracts, and by a natural phenomenon, they are also killing the arbitration. What it does is it poses an unfair amount of burden on the arbitrator who is named in the copy and paste to determine as to what is competence. And of course, one instance that I would like to highlight. So there was a particular arbitration that took place. By the time a party made submissions to the arbitrator, there was a parallel proceeding that happened in the High Court, which resulted in multiple proceedings occurring in multiple jurisdictions. There's no method to consolidate it. And the poor arbitrator is stuck between the fact that a party is basically coming out with a response saying that the matter is filed before the High Court. So I think good investing in a lawyer is more important. Investing in good legal counsel is even more important. I think GCs, I think the focus should be on the ease of doing business. The focus for the GCs should be to approach arbitral institutions or to approach the councils. And I think that's where the Act may have gotten it a little wrong by still hanging in the balance in terms of what the graded institutions are. And these graded institutions is something that we still don't know. I mean, we have a fair idea as to what they are, but we don't know whether, I mean, if I were a GC, I'll be confused in terms of whether I can name an institution without knowing whether it's going to be a graded institution or not.
One last question.
That being said, lawyers also copy paste. Practicing. Of course. It's not just GCs.
Come on. You have been very candid. Thiru sir, you have been the founder of BIMAC. In your experience, how do you see the mediation going forward? How much was the success rate? That is the cheapest way of resolving issues.
No, I'm just not going to talk only about mediation. I'm going to talk about the purpose of why BIMAC. Why BIMAC is that we wanted to have an economic, affordable dispute resolution mechanism that is of international standard, and we want to bring it to India as such. Okay, instead of looking at CIAC or ICC or let it be anything. So it was one of the first organization we started. We are in the 11th year. Insofar as so not only we offer arbitration, domestic and international, but also mediation of domestic and international. Another concept we have is neutral evaluation, which is very, very successful. Okay. Now, when it comes to mediation, I can proudly say the success rate in mediation, which you're also aware, is 100%. 100% is the success rate in commercial mediation. People come from as far as Brazil, US, even Russia to get the disputes resolved under BIMAC. And there are, and the other flip side of it is that as far as arbitration is concerned, it has not gained popularity among law firms and lawyers in India, whereas it is very popular abroad, especially in the Middle East and third world countries, because it's extremely affordable compared to even SIAC and other places as such. Unfortunately, for whatever reason it may be, it has not really taken off in India and not supported very well, with the exception of few lawyers and law firms. Most of the law firms still think SIAC is an alternate or ICC. Well, I think time will change and things. So, one of the main concept of BIMAC is that we want to decentralize ADR and enable organizations like BCIC, Chambers of Commerce and law schools to set up their own ADR centers. So that one is affordability, access, everything becomes easier. And if it's like we have set up, it's about 1.5 years since we have set up BCIC BIMAC Center here. So to ensure that your members benefit and so that it gets resolved, disputes are resolved very amicably through mediation is the first step. Next stage should be arbitration is what we are planning as such. As far as mediation is concerned, yes, I'm proud to say that we have 100% success rate as such, if both the parties come in. Yeah.
Thank you very much, all the panelists. Dr. Ravichandran, you wanted to share something about your experience in NCLT.
No, I was only just want to add this point that in 250 crore insolvency case, with the blessings of the NCLT Hyderabad, the matter was referred for mediation before the Hyderabad, the International Arbitration Mediation Center. And during the course of the journey, of course, the financial creditors were pressing for order of insolvency, and we were defending, and the NCLT Hyderabad ordered favorably in favor of mediation. And in that case, the financial creditor took up the matter with NCLAT. And NCLAT did not agree with the reference for mediation. However, parties pursued mediation parallelly. Then I went to Supreme Court, and Supreme Court said there is no flaw in that if the consent of the parties are there for mediation. As she was saying about consensus between the parties, which is a fundamental for mediation, because the financial creditor side represented to Supreme Court that there is no consensus. However, to put it in the short, cutting the long story short, mediation worked, and we filed a settlement, and all the cases withdrawn. So therefore, wonderful. Mediation is something which can definitely bring better results than in that particular case, given the state of affairs of the CD. CD would not have seen the benefit of his continuance financial creditor would not have definitely got what he has got in the mediation. Mediation is probably the best thing to go, and many of the cases, even OC's cases, operational creditors cases, can be resolved if there is a, like our 12A, some pre-mediation. That's all. Thank you.
Thanks for sharing this information. I'm extremely happy to know this. But let me add one more thing and also want to inform my friend here. In AFCOM's case, the Supreme Court says that consent of both the parties is not required. Justice Ravindran's judgment, which is now recently followed by Karnataka High Court judgment, Justice Suraj Govindraj followed that. Consensus of both the parties not required. Even if one party wants mediation, the court has to refer the matter for mediation. So that is a binding decision as such, and it becomes a law under Article 41. So, and then it's very important that you have a med-arb clause in all your contracts. Mediation, explore that, and then if in mediation fails, go for arbitration. I'll tell you, 99% of your mediation will end up successfully if you have the right mediation. And then again, go for institutional mediation, which is always better.
Plus, Thiru, you can also tell about that 12A post-interim order.
Yes.
The stage of interim order is closed. It is not necessary there should be pre-mediation. The Supreme Court said you go for mediation after the completion of the interim order stage.
Mediation can happen even when the judgment is reserved. Please understand.
That's a pro-mediation decision.
Mediation, any court, you can press for mediation even if the judgment is reserved. Before pronouncement of judgment, you can ask for mediation. Even at an appellate stage, you can ask for mediation. There is no end for mediation as such. And 95% of disputes around the world are resolved through mediation, especially commercial.
Hello, sir. Hi, sir. My name is Tushar Tyagi. I also happen to practice before NCLT.
No, it's okay. Go ahead.
I'm so sorry. I'm so sorry.
Please go ahead. Fine.
Thank you. Yeah. So basically, my question is just to adding to what sir has just said. Basically, mediation. What sir is basically referring to when the matter does not come under the CIRP process, and if the parties are willing to mediate or the court is directing them to mediate. Some parties have done it. However, after the CIRP process has started, Singapore law has a provision for an official assignee to appoint an arbitrator to resolve the disputes with respect to the claims amongst the creditors or with the party. So as an experienced mediator yourself, do you see whether putting that provision under the Indian insolvency law, or do you think there is any future, or is there mediation something which is absolutely can help to ease up the process of the corporate insolvency resolution process within that? So, and also my colleague also just happened to have another question. I have also just want to mention that only. Recently, Supreme Court has given a judgment wherein the arbitral award, if it is passed, and if it is a degree which is there in hand, if it's a payment of money that has to be made to the party, they have considered that payment to be a financial debt, even if the dispute among the parties has to be in kind of an operational related matter. So do you think that judgment is correct, or do you think that judgment is relevant to, although the Supreme Court has decided, but I just want to know what your views are.
I can't tell the Supreme Cort is right or wrong.
I'm so sorry, I just used the wrong word over here. I just want your views on that.
So we can go on a separate discussion on the facts and circumstances as such. Let me answer the first question very competently. Yes, mediation should be brought in, though Companies Act provides for mediation, and the Department of Corporate Affairs has created a panel of mediators where dispute should be referred to. I don't think, at least in Bangalore, I have not seen a single case being referred. I've asked a number of times to be referred, but they are not referring. But in IBC process, if mediation is brought in, I'll tell you, the process of accelerating and bringing a resolution even in liquidation process as such, we can happen very, very swiftly. So it is definitely welcome. Ravi sir, please take it forward. You're very, very influential with the board.
So any more questions? I think you want to add something?
Karan, I mean, slight contrarian view to what you said on the enforcement of arbitral awards. So my experience has been enforcement is a challenge in domestic mainland India, and especially if there's an overseas creditor, the assets are here, it is. And also, an overseas arbitral award, if the district courts in India have ruled favorably for the enforcement, execution of that is still, a significant challenge. I'd like to hear the developments on this over the last couple of years, maybe, what your thoughts are.
So, like I said, it's not perfect, but I think given the general criticism that India has faced, that our legal system has faced, it's a popular thing to say that we're slow, things take time, India is not a nice place to be. Right? It's a very popular thing to say, but it's not entirely true. Things are changing. Like I said, now all awards, especially foreign awards, are looked at with rose-tinted glasses in the sense that there is a pro-enforcement bias. So public policy, which of course has a wide import everywhere else, when it comes to foreign awards now has a very, very limited scope. It's almost defined, right? All international commercial arbitrations now go to the High Court. You don't go to the District Court, right? So there are lots of changes that are afoot, and I'm sure, look, we're improving. Is there room for improvement? There's always room for improvement. I don't think there's a single legal system that cannot improve, right? And I think we're getting there. I think we should just stop complaining now, right? Of course, we'll always have something to complain about, but maybe we should complain a little less. It's just that. I hope I've answered your question. Also, in terms of, my esteemed friend here spoke about MedArb. I think the German experience is excellent. They have this unique hybrid system where the arbitrators will sit, they will go through all your documents, they will ask you to briefly argue your case, and they'll tell you what the award is going to be. They'll tell you what the lapses are. They'll tell each party in the presence of the other party what the lapses are. And then they'll say, are you sure you want to go ahead? Most get settled. So maybe that's something that we can look at here as well in the future.
Early determination is also gaining popularity all across. I don't think India has ever faced, we don't go to an arbitrator saying, why don't you determine this matter? Just give me a preliminary, inference on this.
As a matter of fact, the Arbitration Conciliation Act provides for MEDAR. And Section 32, I think, provides that the arbitrators, with the consent of the parties, can refer the matter for conciliation or mediation. And a settlement reached becomes a deemed award, that is a consent award under Section 34 and can be enforced. A consent award cannot be challenged in any courts as such.
So with this, we come to end of the session, and also the seminar also comes to an end. Probably the vote of thanks will be followed now. Before that, I will do the honors. Thank you very much, the dignitaries and the panelists here. Thanks for coming and sharing your knowledge. It's a good insight. And thanks, audience, for participating and asking few questions.
Thank you, BCIC, Dr. Om, and on behalf of my fellow panelists, thank you all. And everyone for staying patiently throughout the day. Thank you.
May I have the co-chair, Mr. Ramprasad, to deliver the vote of thanks.
Thanks, Om, and let me at the outset thank Dr. L. Ravindran, President of the BCIC, for gracing the occasion, inaugurating it. I have to thank the fellow members. I have to thank the chairman, Dr. Om, for giving this program a shape, and for the mentor, Mr. Venkatakrishnan. A special thanks to him, and for my other core group members, both the Ravindran, Dr. Ravindran, Rashika, jurist, barrister Shrikant Parsarthi, and Pankaj Jain, who enthusiastically participated in the deliberations and brought this program to some shape and light. And I think at the end of the day, it was a very educative and excellent session where I think we'll be giving a host of recommendations to the government. Thank you for that. We would be failing on our duty if we don't thank the Secretariat in full, and I think they deserve a standing ovation. Niranjan, Rupa, Purushottam, for an excellent job that they have done. And thank you, and everybody in the Secretariat, in case I missed. And I also thank Mr. Murli for his presence from the chambers. And special thanks to Mr. PGS for organizing and getting this hotel at a good rate. Our thanks are also to the sponsors, KVB, Conscientia, KSR and Company, Tata Hitachi and Linde. And we thank them. And we also thank the audience for their patient hearing right from morning to evening and going back with tremendous inputs. And our panel of distinguished speakers, 25 speakers, who has 5 sessions and excellent inputs. And the concluding remarks are that it's all positive. It's as I think Karan rightly said, we have actually made tremendous amount of progress. And as Jagannath rightly said, that it's only the last mile connectivity which is still a problem, which I think is understandable for a country with a population of 1.4 billion. And with so much of legislations, we have repealed so many things, we have decriminalized so many things. I think things are looking up. So with those positive outlook, thank you once again. And let's hope we'll meet again for another great program. Thank you all. Thank you.